Supply and demand. She's truly expert at energy aspects. Amrita, to an amateur like me, at night I fly over Russia and I see the gas flares looking down from 36,000 feet, whatever it is. The World Bank keeps very careful flaring data. Explain to mortals what the flaring data means in Russia, and for that matter, in the #2 country, Iran.
Yeah, I wouldn't call you an amateur, Tom, but in terms of flaring, look, we've been collecting that data for Russia as well, just to try and understand whether production is going down and by how much. Because obviously when oil production, when the fields are producing, a lot of countries like Russia, even in the United States for that matter, the gas that comes out of the oil tends to get flared up into the atmosphere because there isn't capturing facilities so that that gas doesn't go up. So that gives you an indication of how much production is going on. And the flaring data we are collecting suggests that production could almost be down about 1.7 million barrels per day versus February levels. And obviously it's going to be heading lower in Russia from here, given that storage is full.
Is Morgan Stanley onto something here that everybody's doing demand studies, and Morgan Stanley suggesting supply dynamics is the thing to study? Do you agree?
I think we have to study both, right? At the end of the day, we've been talking about big production cuts in Russia. Also, the Iran deal, you've mentioned Iran as well, doesn't look like it's going ahead, which then means that Iranian production isn't going to come back to the market this summer. But at the same time, if you don't focus on demand, I mean, we've seen a big hit to demand in China for that matter. That does help in taking away some of the tightness. So you need to do both.
Amrita, given the fact that you're not alone in talking about the tightness of the market, Morgan Stanley is not alone, JP Morgan's not alone, everyone sees this tightness. Why are oil prices not higher?
So I'd say a couple of reasons, right? First and foremost, liquidity is an issue. We have seen huge margin calls by exchanges, partly because of what happened with nickel after the Russia crisis. And you are seeing just bigger and bigger margin calls, which means that traders have had to just exit their position in order to meet that margin call. So we just don't have enough liquidity. Ultimately, the money needs to be in the system, right, for prices to go up or down for that matter. So that's one thing I would say. The other thing is that, yes, the market is extremely tight and it will be tight. I would say that right here, right now, it's not particularly tight, but the Q3 balances are tight. Having said that, we can't ignore the fact that the SPR has helped. It is bridging the gap, particularly in this quarter. The market was trying to solve for an unsolvable problem in Q3. We would have had to have massive demand rationing. Tom and I've talked about this as well. Whereas the SPR allows us to bridge that. It doesn't solve it fully, but at least there's somewhat of a solver. So I think there is that context which is important, that yes, it's going to be incredibly tight, but at least it's a solvable problem right now.
I remember a few weeks ago when we were talking about oil trading like Bitcoin. Are we heading back to that in a couple of weeks from now, maybe, or 2 months, when all of a sudden people have the liquidity and the SPR influence is rolled off?
Yes, I think the real risk around the market is going to be, say, that late Q3, early Q4 period. That's when the SPR rolls off. Demand is still going to be strong, particularly in Asia. The demand numbers coming out of Asia, outside of China, are incredibly strong right now. And that's when Iran would have come back to the market, and we are now assuming that it no longer does. Completely agree. That's when the volatility and the price upside could be at its highest.
Amrita, there's a headline out of Indonesia, away from you, on cooking oil. And this is the agricultural issue, folks, of what agricultural oils end up doing. How does your world fold into the grain oil world? I mean, higher Amrita Sen oil prices crushes global food oil, doesn't it?
Well, it's even more complicated than that. And in our transition focus that we've got here, one of the big aspects of what we are focusing on is biofuels. And in order to meet certain green targets, more and more companies and countries, for that matter, are simply switching towards exactly like you said, used cooking oil or just more biofuels, which then in turn is having a huge detrimental impact in pushing up food prices. So there is going to be this big tussle between green energy and food prices, only going to get worse as some of these green mandates accelerate.
I hate to talk about food shortages in tandem with investing because the human story is so much more important, and yet that is what we do, and frankly it is a testament to how we move forward. And I do wonder how much of the oil story and the tightness that we're seeing in the energy markets has been priced in on the equity side. When you take a look at some of the oil majors, up 40-50% year to date, has this all been priced in there, even though it's not necessarily being reflected right now in the actual commodity space?
No. I mean, in both sides, right? Like, not only is this just the price of oil falling, but even on the equity prices, the reason they haven't gone up and they should have gone up even further is because ultimately we still are in this mode of, oh, oil demand's going to peak and we're not going to need oil and gas. And I think one of the biggest reasons we are in this crisis today is precisely because of that, I would say, mistaken concept around we don't need fossil fuels. The focus needs to be on cleaning up and decarbonizing the process of production because demand is still growing very, very strongly. I'll give you an example. We talked about oil prices. Just have a look at heating oil prices or jet fuel prices. They are nearly at 2008 record highs just over this past week. So it's a clear sign that demand is very, very strong. We just don't have enough investment.
Emery, to go retail honest here, I just looked at AAA unleaded in America. It's down from the peak, but it's curving up. Do you just assume as a grizzled pro that the price of a gallon of gas is going to break out to record highs?
It's a real possibility this summer, Tom, because we still are going to be missing a lot of these Russian blend stock material that the U.S. would have imported otherwise. Demand has come off a little bit in the U.S., but not huge amounts. I wouldn't rule it out. I absolutely think it's possible that we go back to those record highs, if not higher, this summer.
Great to catch up. As always, Amrita Sen, thank you, of Energy Aspects. Just getting a headline out of Singapore. Singapore easing travel and workplace curbs as the COVID threat recedes. And Tom, we've seen story after story recently of banks getting out. And I say getting out, and let me be precise about getting out of Hong Kong, moving people from Hong Kong, not necessarily exiting Hong Kong absolutely entirely, but moving people from Hong Kong to Singapore, which is a story, Tom, that you've been on top of for quite a while.
It's been a mess for decades. It's a lot of talk by well-meaning people, and the logistics are challenging. And I'll be honest, John, the heat is an issue. Every time I'm in Singapore, even and I think it's their winter, I can't remember right now. I'm sorry, the weather's different. It is hot. It's like Perth in Australia, actually, now that I think about it.
More headlines here. Bravo. Singapore removes capacity limits for large events, drops group limits for gatherings, for restaurant dining as well.
Well, and the broader context here is really important, which is that China has not moved away from the zero COVID policy. Singapore has. Australia has. Almost every other region has, and they are enjoying the economic benefits of that. When you talk about people leaving Hong Kong for Singapore, yes, part of it is because they are concerned about the increasing integration between the mainland and Hong Kong, but they're also trying to get away from what they view as arbitrary lockdown rules, considering the science. And I think that that is really significant for the months and years ahead.
John, it's like food inflation, as we mentioned with Indonesia and Southern Asia as well. And I mean, John, you look at a barrel of oil, as Amrita Sen talks about, and then you bring it over to Indonesia and food inflation, like the essential oils that are so important to society.
Where are you going with this? Why are you laughing?
John, essential oils are vitally important, like juniper and incense.
Is that what you're suggesting?
Orange bitter is an essential
because
oil.
of the blisters on my hand. Okay.
And orange bitters for a
Are
straight.
you done today?
These are.
How long are we going to do this for?
We're going to keep doing
2 hours and 20 minutes.
A lot of serious things to talk about, including Boris Johnson's future, who said yes, he's confident he'll be the Prime Minister in October.
Probably needs an essential oil.
Are you confident you'll be anchoring this show in October?
October. we're trying to get to May 1.
I'm with you. Futures down 0.4%. From New York with Tom Keene, Lisa Brammitz and Jonathan Ferro. For our audience worldwide, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The US again is threatening China of sanctions if it offers material support for Russia's war in Ukraine. Deputy Secretary of State Wendy Sherman said China wasn't helping the situation in Ukraine by doing things like amplifying Russian disinformation campaigns. She also promised to help India end its dependence on Russian weapons. Shanghai is vowed to step up enforcement of lockdown measures to prevent community spread of the coronavirus. China is in the midst of its worst outbreak since the pandemic began. Shanghai's 25 million residents have been in one form or another of lockdown for weeks. The city reported a record 11 deaths yesterday. And in France, Emmanuel Macron is closer to winning another term as president. Nationalist leader Marine Le Pen is running out of time to narrow that gap between them before the runoff election on Sunday. Polls indicate Macron has about a 12 percentage point lead. Le Pen needed to land a major blow in the presidential debate on Wednesday night to catch up, but she failed to do so. Honduras has extradited former President Juan Orlando Hernandez to the U.S. office to face drug trafficking and weapons charges. Hernandez was flown to Miami. Honduras is a major hub for cocaine shipped to the U.S. from Colombia. The indictment says Hernandez took millions of dollars to shield drug traffickers. France has issued an international arrest warrant for former Renault CEO Carlos Ghosn. 4 others are also sought for allegedly helping Ghosn siphon millions of euros from the French automaker. Ghosn now lives in Lebanon after a daring escape from Japan, where he faced charges of financial wrongdoing. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its 2 biggest billionaires.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It is appropriate, in my view, to be moving a little more quickly, and I also think there's something in the idea of front-end loading whatever accommodation one thinks is appropriate. So that does points in the direction of 50 basis points being on the table.
50 basis points on the table for Chairman Powell over at the Federal Reserve. Nomura thinks after that you get 75 and then 75. The debate continues. Futures negative on the S&P 500 by 1/3%. On the NASDAQ 100, we are down by a little more than a quarter, negative 0.27%. You got something to say, Tom?
Yeah, I
what
think
are you
it's
excited
important,
about?
John.
Sure.
I thought what Claudia Sahm did with Lawrence Summers yesterday was fascinating. But John, can we stop and have a moment of silence for the people who nailed this inflation surge, like Lawrence Summers, Dudley, Al-Arian, and a select others?
That was it. Was that enough time for him? Or do you want more time?
No, I think there was a raging debate off the show yesterday, John.
I'm with you. Catch up with Mohammed later this morning.
You can,
at 9:30
these
Eastern.
guys can be
Shall I hold a
opinionated.
moment of silence for him?
Oh, you've got Al-Arian later today on one of your properties?
I'll catch up with Mohammed later on.
Why don't we get him? He doesn't want to get out of bed. What is it? He's looking at
often
Jets
because
reruns?
you ask some random questions, Tom, about cooking oil and blisters.
Okay, that could be
I imagine that might have something to do with that. I've got a poll for you, Tom. Macron leading Le Pen, 57-43.
Huge.
In an Opinion Way election runoff poll that just came out.
Yeah, we'll get to that in a moment. Kriti Gupta here on Euro and the dynamics of that, what it means for the next president of the 5th or 6th Republic. Kriti, what do you have?
Yeah, well, you just heard at the very top of the block, Jerome Powell, the Fed chair, talking about front-loading those rate hikes. If they're going to hike, they're going to do it aggressively. That's a very different approach from what you're hearing from the ECB, which is really leaning towards that gradual increase. What does that mean for the euro, though? Tom, yesterday we talked about Japanese yen weakness. Today we're going to talk about euro weakness. The idea that the euro is actually weakening against the dollar, parity on the horizon. We're looking at about a 108 handle when it comes to euro dollars. But what's interesting here is the impact on this pair from the French election. The base case for a lot of investors on the FX side is that there is going to be a Macron win, the 14-point lead that John just mentioned. A euro-friendly outcome is the expectation. They're pushing perhaps the euro at the Monday open in Asia to 109. The other side of that, though, is the Marine Le Pen victory, which would have bigger implications for the euro dollar, expecting a gap down to 107, potentially 106, and even 105 if indeed Marine Le Pen wins out on top. Once again, the market short euro into this election, Tom.
We'll talk about that through the morning here as well. A 105 would be a shock. Kriti Gupta, thank you so much. In Paris, Francine Lacroix. And Francine, I believe it was in Macron years ago where you and I interviewed Sudhir Harazing of Oxford University. His essay in the FT is stunning, and he speaks of a fractured France between prosperous Paris and everybody else. How fractured is France?
Well, France, and bonjour from Paris. The France that we knew 10, 15 years ago has really shifted to angry votes. So it could be extreme right, extreme left. But you're absolutely right, Tom. This is a fractured France. This is a France where actually, much like the Brexit vote, a lot of people outside Paris do not like the antics of the Parisians because they see them as elitist, as not in touch with the people. And this was the same thing that they say of President Emmanuel Macron. Now, if you go back to those polls, yes, it looks like he could win because he's at 55% of the vote on Sunday. But I think we're underestimating the fact that we could see Marine Le Pen have a surprise.
Well, it's about the turnout. Who gets the left? I mean, that's all the big debate. And, you know, we don't need to do a history lesson here. How does the left vote for Le Pen, the far right? I don't understand that.
So, Tom, this is also very different left to what we've known in the past, right? So if you look at the results of the first round, you have a Jean-Luc Mélenchon. Now, Jean-Luc Mélenchon, at the last minute, managed to have the third biggest number of votes, but this is not the left. This is the far left. He managed to also get the votes of a lot of angry people. Now, we've looked at chart flows, and this is, you know, the biggest question is actually the people that voted for Jean-Luc Mélenchon in the first round, do they vote for Marine Le Pen? We understand that maybe 25% of those votes would go to Marine Le Pen.
Really?
About 35% of those would then go to Monsieur Macron, yeah, because they have quite a lot of links between the far right and the far left. And then you're right, it's these it's not the undecided voters, it's people that basically are disenfranchised and say they don't want to go and vote on Sunday.
Lisa, c'est formidable.
Oh, dear Lord. What was the name you said earlier, Tom? Just one more time.
Oh, Souter. Professor Hazara Singh laughs at me. I can assure you of that.
Well, all right. I think that John has lost it as well.
Well, is what Tom, Lisa used to tell Madame Lagarde.
Yeah, well, and if you listen to Bonjour as the day goes on from Tom Keene, you will also find it increasingly hilarious. I do wonder, Francine, what turnout's going to be like, given the fact that in the first round, it wasn't as high as a lot of people expected.
Yeah, and this is really the million-dollar question. Now, turnout could be one of the lowest in the Fifth Republic. There's also a school of thought that says, look, because it is a repeat of 2017, you're going to have what the French call the blocage, so tactical voting to try and make sure that there's not an extreme party in their eyes to come through.
Right.
So voter turnout will be extremely important. It's not expected to rain on Sunday. That does make a difference, especially if you're in rural France. But it's something that we'll have to see as voting goes on Sunday.
For those of you on radio, Francine Lacroix looking spectacular this morning in Paris. And John Farrell, I'm sorry, it looks like she's done some reporting at Printemps in their new vintage store on the top of that historic department store.
She always looks fantastic, and I'm looking forward to her coverage this Sunday, Tom,
Yeah.
of the French election, live from Paris, starting at 7 p.m. in London
Why aren't we there?
and 2 p.m. in New York,
John.
because Francine's all we need, TK.
No, it could
You're
be
a
a group
distraction.
team effort.
Francine, thank you. As always, Francine Lacroix.
Learn on your, work on your pronunciation.
You think, let me tell you a story and take you behind the scenes. TK and I have always had an arrangement that I'll manage the clock, because everyone who works in TV here at Bloomberg and radio knows that TK cannot manage a clock. So I'll get us into the break, out of the break, and Tom brings in the guest, except when he does not know how to pronounce the name. So back in the day on radio, what TK used to do, he'd do this big build up to a guest, and then he'd turn around to me and he'd go, John, when are you bringing our next guest?
Well, that's better than when he just makes it up.
Sometimes he'd choose to butcher it, and when this show was just on radio and not on TV, and I could hide behind the desk, literally crying. It was good, but now it's on TV too, I can't hide.
Trophy taking with Lisa Abramowitz while you were on sabbatical was we were at the International Monetary Fund.
Who did you offend?
They had this director of strategy, this wonderful woman from Turkey, and we never got there.
Well, no, and Tom was insulting me the whole time. He said, you're just already killing the conversation by trying to get her name right.
I had the honor of the first interview, the greeting of Kristalina Georgieva to her IMF. And I'm standing there, John, in front of 800 people, all the muckety-mucks, all the ambassadors, and I'm going, Georgieva.
Where's John? Where's John?
We say good morning to Dr. Georgieva.
Futures negative 1/3% on the S&P, on the Nasdaq down about 4/10 of 1%. There's a clock here to manage, Tom. Yields up 3 basis points on a 10-year, 294.14.
Rock, I got that.
From New York City, on TV and radio, this is Bloomberg Surveillance.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The American consumer right now is actually weakening.
High prices, high inflation, they're disruptive. Like, they make life challenging.
There's nothing wrong with being a picky stock buyer in this environment.
High yield spreads are still quite range bound and resilient.
Over the long term, people should remain calm because that's the path to prosperity.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures on the S&P and on the Nasdaq soft, the lower negative, 0.33%. On the week, a massive move in a two-year yield in America in the Treasury market, Tom, up 30 basis points.
Huge move in treasuries, and I have to admit, John, with everything that's going on, still the best indicator of all the central bank chat is the yield and the yield dynamics. And John, as you go into the real yield this afternoon, going from the celebration of zero, a positive statistic, a reversion in the real yield back to negative 0.10. That's informative.
We very briefly had a positive yield earlier this week. It did not last long, Tom. Conversation's been dominated by more hawkish calls for a big move in May, 50 basis points from Chairman Powell. That looks nailed on. It's the race to get to neutral, Tom, and I think the debate remains open-ended. Do they get to neutral and then what? Then what? Do they go much higher than that?
Yeah, Lisa brought this up, 2-3 days ago. John, do we have a clue where John Williams' neutral is? I don't think we do, given the gross supply shock and now two once-in-a-lifetime events, this pandemic and this horrific war in Ukraine. I don't think we can gauge where neutral is.
We don't know, but we do know what they think. And Lisa, they think it has a two-handle.
And they think that they can get inflation under control, and they think that they're going to have to hike rates with ever quicker kinds of handles. What I'm struck by is we're talking about how hawkish they're getting, right? And then yesterday at 4:30 p.m., I logged on to the Fed's balance sheet, and I was so excited to see quantitative tightening. And I saw the quantitative tightening that was less than $10 billion to $8.956 trillion, right? It has basically flatlined.
That's the point. They're not restrictive yet.
Correct.
They're not restrictive. And even if they go quicker and get to neutral quicker, they're still not restrictive. The clue is in the word neutral. And Lisa, from there, you start to look at inflation expectations. And that's what's been curious to you and I through the week, in fact, through the last month or so. For all this hawkish talk about 50 basis point moves from the Fed and moving towards neutral, what's the word they're using now? Expeditiously.
Yeah.
Getting there quickly. Okay. inflation expectations are still climbing higher, judged by the bond market. And I don't know if that's a great read or not, but that's what's happening.
Honestly, Hoisington Investment Management has been one of the longest standing bond bulls out there. They have been right through everything. They sounded a note of caution and said this time bond buyers should beware because it does look questionable whether the Fed understands how quickly they have to go in order to curtail inflation, and that could let inflation get more unmoored than people are prepared for.
Let's whip through this price action for you this Friday morning. Good morning to you all. Going into the weekend with equity futures just a little bit softer on the S&P and the Nasdaq. The S&P down 1/3%. I talked about that big move on the week in Treasury yields, 30 basis points on a 2-year this morning, up 6 basis points. On a 10-year, up another 3 basis points. So the curve just a little bit flatter. Your 10-year, Lisa, 293.75.
How do you hike into a weakening economy? And this is really the dilemma that we're seeing around the world, but in particular in Europe, and that really has been one of the main themes of the IMF conference. There is a seminar today that starts at 10:30 a.m., Inflation Dynamics in a Fragile Global Economy. Very aptly named, given the fact that Bank of England's Andrew Bailey is going to be on that panel, as well as IMF's Geeta Gopinath. How much do they address the idea of what you're seeing in the pound, which is an ongoing weakening, as you get even some more hawkish talk from some of the Bank of England officials, because frankly, this is all about economic growth. And how much in the U.S. are we looking at something that looks more unmoored when it comes to inflation expectations over the next 5 to 10 years, rising to the highest levels to going back to 2014? 11:45, Treasury Secretary Janet Yellen is joining Bloomberg Television. I want to hear what she says about oil bans from Russia. How much is this a no-go in Europe right now? And then what do you do in order to really provide some funding to Ukraine and penalize Russia for the incursion if you do not have an outright ban on Russian oil? I'm watching oil prices, and really I think the question is, given all of the calls, whether it's Bank of America, whether it's JP Morgan, you name it, for higher oil prices, for the tight oil market, why is oil hovering around some of the lows that we've seen over the past few weeks? Why are we not seeing more of a pop? And on Sunday, there is that final round of voting to select France's next president. We were very concerned, or at least a lot of traders were, about some sort of upheaval in the status quo, what that could do to the euro. And now we do see Emmanuel Macron leading Le Pen. We're not getting much of a boost to the euro. So I wonder, John, how much that really was a tail risk and how much that was a distraction amid an ever concerning economy.
Something to watch going into the weekend. Lisa mentioned sterling briefly. Cable off the lows. The pound against the US dollar now 129, but negative 0.9% still on the session. And Tom, that data was weak. Retail sales was disappointing. Consumer confidence was the lowest since 2008. And that's a challenge to this Bank of England, who are looking to hike rates and hike rates again.
Every nation's story is different, but the interdependencies here, John, I just think are profound. And I'm going to go back to a phrase we haven't used in days, if not weeks, which is Jerome Powell is central banker to the world. Can he go 50 and 50 and ignore Canada, ignore the rest of the world? I don't think so.
If inflation's at 8.5%, Tom,
yeah,
maybe
Chinese yuan just through 6.50.
I'm with you on
example.
China, and that's a big problem for the Europeans who are looking to hike interest rates maybe later this year. Jean Bavin joins us now, the head of the BlackRock Investment Institute. Jean, to make it simple, you still like equities. Why?
I think we've covered a bit of the central bank landscape here, and I agree with a lot of what has been said. I think we're going to end up living with more inflation than the rhetoric is suggesting. At the end of the day, we're only talking about normalization of policy. The Fed, I don't think, despite the talk, the hard talk, the tough talk, I don't think they will really go beyond neutral, at least for now. They're not intending to do it, really. I mean, if they were, they would show unemployment rising from the unhealthy level that it currently is at. And so given all this, I think we see a bit of excessive hawkishness, being driving markets at this juncture. And so we think we're going to be, at the end of the day, I see a rate backdrop that's going to be somewhat more conducive or supportive of equities. And then it's a relative call, right? I mean, in this environment, the place you don't want to be is in fixed income. So I think on the relative basis, equity do look a lot more attractive than fixed income in an inflationary environment.
John, we're looking on the Bloomberg terminal at a little bit of unraveling in emerging markets as indicated by currencies. There's other tea leaves as well. You grew up with a PhD at the House of Bernanke at Princeton, where he believes financial stability is everything. From your view at BlackRock, how financially stable is EM right now?
So EM is a big space, right? I mean, I'm sorry to state the obvious at the outset, but it's particularly important at this juncture because you have a very complex story playing out in EM over the course of 2022. There's a commodity story that is playing out. So we've seen Latin America performing fairly well during that period. We have a China story, which we think is not necessarily EM anymore, but as part of the index. And then you have the fallout from Russia that has been affecting especially European emerging markets. So these are very distinct forces. I think overall, it turns out we're in an environment where rates are still pretty low, and EM world has been earlier on in trying to normalize policy. I mean, they've started earlier. I think they were ahead of this. And I think that provides a bit more resilience. And so that's why we continue to be overweight, EM local debt, for instance. We think that continues to be attractive in this environment.
Jean, how can you look at sectors at a time when so many people are talking about specific idiosyncratic stories within emerging markets or within the equity markets, if you're looking at, for example, oil versus financials or versus consumer discretionary? And how are you surgical as a very big firm at a time when so many people are talking about security selection?
So this environment is one where beta is not going to be your friend. I guess there's going to be quite a bit of challenges, which we already talked about, and so I think that makes security selection potentially an environment more conducive for security selection. My team is responsible for broad asset allocation, so I'm not the one that's going to be very surgical on this. But certainly we have a large set of teams here that are seeking opportunities in this environment. I think at a broad macro level, I mean things like the commodity story I think has a lot of security selection implications. The climate transition and how it's playing, because that's not a straight line, and that's another big theme I think on security selection. And I think a third big one is making sure that the read-through from the rate adjustment, discount rate now that are going up into the earnings potential of companies, that connection is not misread. And I think there's a bit too much of a mechanical read-through that higher rate is bad for tech, for instance. We think it's a lot more nuanced than that, and that's where the opportunities will arise.
Jean Bavin of BlackRock, the investment institute. Jean, great to catch up with you, sir, as always. And Lisa, this is what it comes down to for a lot of people, not everyone, but for a lot of people, a binary choice between a Fed that causes a hard landing or one where the Fed just has to live with higher inflation for a whole lot longer. And it just seems to me that Jean Bavin is taking the second view and not the first.
Which actually would go against what a number of Fed officials are saying, talking about moving into restrictive territory. And it also raises the concern, can they allow inflation to run at a higher pace, but that's constant, rather than one that remains at a much elevated pace that really deteriorates the economic trajectory?
When you're watching a central bank, and we all know this, and a lot of people watching know this too, you look for the consensus, and then you look for the division. The consensus is on getting back to neutral and doing it quickly. That's where the consensus is. The division now is the bit that matters. It's what happens after you've done that. We know the St. Louis Fed President Jim Bullard would like to get a 3 handle on the Fed funds rate by the end of the year. That is not a consensus view on this Federal Reserve. Tom, they want to get back to neutral and do it quickly. I've got no idea what quickly means. Expeditiously, maybe it means by year end you get 2.25, whatever. After that's the bit that matters, Tom. Ultimately, do they have to go to 3? Do they have to go to 3 and beyond?
When we talk about the nonlinear effect, the answer is when you get up to that level, John, there's profound effects in a lift. I think everybody understands where we are now is abnormal. I don't understand the idea of the pros that you have a vector in place and you go, 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 versus saying 1 and done or 2 and done.
Let's talk.
They will say we can't do and
to
done.
A pro. We can catch up with Jeff Yu in the next ad, Tom, at BNY Mellon. Fantastic lineup on the program this morning. You've got that one, too.
I nailed it. Thank you.
Yeah, no doubt. Futures down about 0.1%. We're recovering this morning. The Nasdaq almost unchanged. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Ritika Gupta. Federal Reserve Chair Jerome Powell has outlined his most aggressive approach to taming inflation to date. He has potentially endorsed 2 or more half percentage point interest rate increases. At the same time, Powell described the labor market as overheated. The Fed chief is taking direct aim at strong demand that he that the central bank wants to cool. In Germany, Chancellor Olaf Scholz pledged to continue shipping weapons to Ukraine, but he says that direct military confrontation with Russia that could lead to nuclear war must be avoided at all costs. In an interview with the magazine Der Spiegel, Scholz also reinforced his rejection of an EU embargo of Russian gas. China is stepping up efforts to stem the stock market slide towards a 2-year low. It's now urging big investors to buy more shares. China's securities regulator issued the guidance at a meeting with investors, including the country's giant social security fund. The benchmark CSI 300 index is down more than 18% this year. And Elon Musk's attempt to buy Twitter has gotten a lot more real. The world's richest person has lined up more than $25 billion in debt financing from Morgan Stanley and other financial institutions. Musk also is pledging to contribute another $21 billion of his own money through equity financing. Twitter says its board will review Musk's proposal. Bloomberg's learned that Renault may sell part of its stake in Nissan. It's a move that could raise billions of dollars to help pay for the company's shift to EVs. It would also ease long-standing tensions between the two automakers. Renault's stake in Nissan is valued at about $7.7 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts, great questions. On Bloomberg, Treasury Secretary Janet Yellen speaks live with Bloomberg's David Westin. Tune in at 11:45 Eastern on Bloomberg Television and Radio. Bloomberg, your unmatched source for global financial news.
The Ukrainian armed forces are still in town. Yes, most of them are blocked in these Azov steel plants. I think it's premature to say that Ukrainian city of Mariupol is being besieged or is being taken by the Russian armed forces.
That was the Ukrainian president's deputy chief of staff from New York City this morning. Good morning. Equity futures on the S&P shaping up as follows. We're negative a little more than 0.1% and well off session lows. After the pain of yesterday afternoon for the Nasdaq, we recovered this morning to unchanged now on the Nasdaq 100. Yields just a little bit higher. They were much higher on a 10-year, 292 right now at the front end of the yield curve. Yields up as much as 30 basis points at the front end on a 2-year on the week. We come back just a little bit now on the session, up almost 5 basis points to 273. And just a programming note once again, Tom, looking forward to hearing from Secretary Yellen a little bit later with David Westin. A must-watch interview later on this morning.
I really got to say, the last couple of times she's spoken, there's not so much been news there, but concept there, theory, and it's a very different Secretary of Treasury, folks, than what we've had before with her central bank experience. Right now, Emily Wilkins in Washington, Maria Tadeo in Europe, in Brussels, looking at France in an election. Maria, I want you to bring an assumed Macron win over to his to-do list with the war in Ukraine on Tuesday. John helped me with this on the break. Que fait Macron, Marty? What exactly does he do on Tuesday?
On Tuesday, but why Tuesday? It should be lundi. It should be on the Monday. That's when he would essentially go back to his agenda.
You know, it's France.
Did you just get the
no,
day wrong?
It's not day Monday. He doesn't day Monday. He got the day wrong. But you know, I think the to-do list for him, and on a serious note, is of course he wants to get back on track with the economy, but also of course dealing with Vladimir Putin. The issue here, Tom, and this is a problem for Emmanuel Macron, is that there is now a number of European leaders who say they don't want him to be on the phone with Vladimir Putin. So he insists that this diplomatic channel has to stay on. Remember, the French say they're the only ones that can bridge the gap between Russia and the United States. But for many, particularly in Eastern Europe, they say that this is not just about his ego, but it's also dangerous if Vladimir Putin perceives this as a policy of appeasement.
Okay, well, we'll do surveillance correction right now. Que fait Macron lundi? We're going to do that right now, just for Maria Tadeo, who's correcting me as we go. What are you doing? You took Pharaoh 101. Great. Maria, seriously, this war has gotten really ugly within all the diplomacy, your trip to Helsinki this week and all. What is the strategy on war on the land in Ukraine?
Well, I was in Helsinki, and by the way, Tom, and this is very important, it is very clear to me that Finland will apply for membership of NATO. They'll do so before June. All of this because they're very concerned. I picked this from every MP that I spoke with about this huge land border that they have with Russia. They've seen what Russia's capable of doing in Ukraine. I think the focus today, and we've talked about Mariupol repeatedly, but a Russian general this morning hinted at stage 2 of the war. And what they say now is that they want a full corridor that would go from Donbass to Mariupol, then go to Crimea, but also now they say Transnistria. And remember, this is in Moldova. So you see that this is a Russia that, far from retrenching, is actually now expanding.
Emily, in the United States, the focus has been how to deal with the oil and gas issues, with the tension around Germany not wishing to ban them because of the impact on the economy, but also China. And I do wonder how much we're going to hear from Treasury Secretary Janet Yellen today about potential Chinese sanctions if they do not more aggressively distance themselves from Russia.
Well, we definitely heard a little bit from State Department officials the other day, again saying that China could face sanctions if they continue to assist Russia, if they continue to provide Russia some form of relief from the sanctions at this point. I definitely think it's a good thing to be keeping an eye on, because you have seen Washington really try and pressure Beijing to kind of stay out of it, or at least stay neutral at this point. It's one of those countries, China as well as India, where the U.S. is really keeping an eye on as they're trying to work with allies in Europe. And Lisa, as you point out, that's not always easy to do. Different countries have different demands.
Yeah.
And you even heard Secretary Yellen the other day kind of suggesting that it's not really feasible to ask our European allies to completely rid themselves of Russian oil and gas because of what that would do to their economies.
Emily, to understand the progress as we move further into this conflict, what will it do if Russia does succeed and everybody agrees that they have taken Mariupol? Is that acceptable? Is taking some of the eastern regions of Ukraine acceptable in Western eyes? Will they let it be if Ukraine basically says, fine, take that, and we'll move on?
You know, at this point, it doesn't seem like the U.S.'s stance toward Ukraine and Russia has shifted much. There is still a high willingness to provide military aid, humanitarian aid, aid to refugees. But at this point, that red line, that they're not going to be sending U.S. soldiers into potential conflict with Russia, that they're not going to declare a no-fly zone, those still things seem to be very much in place. It'll be interesting to see if that does shift as the war continues. Obviously, a lot of the really heartbreaking images and stories that have been coming out have shifted the conversation. But what we've seen, those red lines that were in place weeks ago, still remain in place right now. And there doesn't seem to be much of an appetite in Washington to do anything beyond continuing to send financial aid, continuing to send military assistance, and continuing to find ways to assist Ukraine that don't involve American boots on the ground.
Emily Wilkins in Washington, brilliant as always. And I do have favorites, and my favorite is Maria Tadeo out of Brussels. Maria, thank you.
That was your favorite.
Wasn't that just brilliant, Tom? Just, a French correction.
Well, no, I know we got a correction. I mean, surveillance correction. Que fait Macron lundi?
Lundi.
Yeah, well, that's the way it is. It reminds me of the FAM. The FAM moved John from Scotland and Dundee down to where Blanchflower is.
You got anything else you'd like to add in this segment before I move on?
Did you understand any of that, John?
No idea.
Okay, just wanted to clear that up.
No idea. I can't translate all of it, Bramo.
Thank you.
Futures down 0.2 on the S&P, on the Nasdaq 100, negative 0.04%. Would you like to share what's in the Green Cup this morning?
Well, it's a Friday tang.
Okay, 291.61, yields unchanged on a 10-year.
Also known, John, as Tang Vendredi.
Oh, interesting.
Thank you.
A Friday tang. Yields up at the front end, Lisa, by about 30 basis points this week, and that's getting a ton of attention.
Remember last week when people were talking about peak hawkishness, and then we got even more hawkish, at least with some of the speak and some of the expectations on Wall Street. And I wonder how this is going to progress as people continually try to place, all right, this is it. 275 back-to-back rate hikes, front-loading, boom. All right, but we're going to now move on. Is that really going to be the case? What happens when they actually start doing some of this?
The heart of this debate, and it's fascinating debate, folks. We live this every day. We're thrilled you're with us on radio and TV. John, this week, have we migrated persistent inflation out farther? My answer is we have.
Looking at some market-based expectations of inflation, there's some of that going on, Tom. We can talk about that in a moment. A little bit later, we'll catch up with the White House. Dalip Singh, the White House Deputy National Security Advisor for International Economics. We'll catch up with him a little bit later. Futures negative 0.2% on the S&P. On the Nasdaq, we are down just 0.05%. On TV and radio, this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Live from New York City this morning. Good morning. 3 weeks of losses on the Nasdaq this morning. Futures just about unchanged. Off the back of the pain yesterday in the afternoon, linked to what's happening with interest rates. Michael Harnett over at Bank of America calling it the meta curse. Rate shock, tech trauma. At the moment, no sign of that trauma. The S&P 500 down by a little more than 0.1%. The move on the week, though, in the bond market, all at the front end. A move of almost 30 basis points on a 2-year Treasury. Right now, yields higher by another 4 or 5 basis points to 270, 281. Just off the highs for the year on a 2-year, on a 10-year, 291.42. But something that Bramo's been looking at for a while, I think is really, really important. It's the so-called break-even. The difference between subtracting the yield on the inflation-linked curve from the closest nominal yield, and you get this implied rate of inflation, the so-called break-even, your 10-year, north of 3%. Now, this gets very interesting, Lisa, because the conversation has been dominated by higher interest rates at the front end, a more hawkish Federal Reserve, yet at the same time, something is going on with inflation expectations in this market.
Basically, the market is saying, we've seen the Fed over the past decade, they will not try to torpedo the market. They will be cautious. They will back away from some of the most hawkish predictions. As a result, inflation over the longer term will climb much higher than people previously expected. That is a game changer that is not consistently bled out through all asset classes.
That's the fundamental read. Would you lend any weight to the idea that maybe we've just got a liquidity problem here, perhaps in tips, and that perhaps these big moves in this market, Lisa, aren't representative of anything without much catalyst at all?
Sure, but I would say that a lot of the market's like that right now. We were just hearing Amrita Sen say the same thing about oil. So at what point, where do you get the signals, right? I mean, you could say the same thing about so many of the markets, but at a certain point, that bleeds into expectations and, frankly, into policy. So I agree with you. Perhaps this is a muted or misread signal, but we are also seeing the yield curve steepen, which is also not what you expect at a moment of ever hawkish predictions.
So that's the cross-asset price action in English, not in French. Did you like that? Let's get you some movers. It's not bad, TK. Not bad. Let's get you some movers. We can do that with Romain. Good morning, Romain.
John, over the last week and a half, we've heard from all the major banks here saying that credit card spending continued to be strong. We're getting American Express earnings. They seem to be ratifying that narrative as well. A 30% jump in revenue in card activity in the most recent quarter. Unfortunately, that was offset by a 34% increase in costs here. Investors now trying to sort of digest whether the trade-off of the higher costs on those new rewards and other things to attract new folks onto the platform, whether that's going to be enough to justify the current pace of growth there. For right now, they're not necessarily seeing that. The share's down only about 0.9% here in the pre-market. Meanwhile, Schlumberger higher by about 3% here on the day. The CEO there Hey, pretty bullish, actually, saying that the disruptions from the Ukraine war causing a lot of countries now to seek out new sources of oil. That could be a boon for oil field services companies like Schlumberger, and we're still seeing a lot of disruption in the automotive market. Autoliv, which of course makes seat belts and airbags and other things for cars, says that it's not necessarily its production that's slowed, but the slowdown overall in vehicle production because of the supply chain issues. That's weighing on orders. The company revising its outlook for organic revenue well below what the street was looking for. Those shares down 9% here in the pre-market. We got Snap earnings after the bell yesterday. It's the first major ad-supported social media company to report. Investors really don't know what to make of it, Tom. The shares were down as much as 23%. They were up as much as 10% now. They're basically unchanged on the day. I know you're a big Snapchat fan, Tom, but right now the user growth...
I thought that was Snap-on Tools.
Snap-on Tools. I think their business might actually be doing a little bit better with regards to customer ads than Snap is, but they're hanging in there. And Tom, I also know you're big on Gap stores here. The new Yeezy. Yes, Tom.
Well, tell me about Gap. What are we doing with beige pants? What are we doing? What's Gap
Well,
doing?
I think they're trying to expand from beige pants, Tom. You know, they had that big deal with Kanye West. That brought a lot of buzz, but they actually lost the CEO of Old Navy stepping down, Nancy Green. She's going to be moving on. Remember, Old Navy, that was actually the ballast for this company here, Tom.
Maybe Kanye can run Old Navy. I want to talk to you, Romaine, about the urgency at Warner Brothers Discovery. You know, I don't want to make any jokes about it because we've got colleagues and friends at CNN Plus, including the wonderful Andrew Morris. Romaine Bostic, I'm going to cut to the chase. There's got to be a renewed urgency at Warner Brothers Discovery to find synergies, given what the stock price has done.
And I think they found that synergy. When we were talking a lot about the new CEO, the new executive team's taking over. Of course, we all were sort of looking at the way that CNN Plus was basically jettisoned just a few days after this deal closed. I think the strategy is there. The question is, how do they pull it all together? And more importantly, Tom, is it going to be enough to really boost that subscriber base?
I'm going to editorialize you. A lot of jokes about this. There's nothing funny about it. There's a lot of people involved, and we wish them all the best of luck, to say the least. Romaine Bostic, thank you so much on the close this afternoon, I should say. I'll get it. Thank you.
2 p.m.
L'après-midi. Very good. Kelsey Barrow with us right now with Bob Michael at JP Morgan on yield with an exceptionally smart note that pushes against step into bonds now. Kelsey, thank you for joining this morning. You use this phrase oversold. Let's be clear. It's not yield. That's price. Price down, yield up. And you say price can stay down. Discuss that.
Yeah, so oversold markets can stay oversold. We've seen a massive rise in yields. It's been globally oriented. You have the 2-year German Bund above 0 for the first time since 2014. And we think that this hawkish rhetoric from central banks around the world is not going to stop anytime soon. I heard you guys discussing inflation and inflation expectations rising. Well, the flip side of inflation expectations rising is that front-end real yields are still falling. So right now you have the 2-year real yield at minus 1.8%. That's almost 400 basis points away from where we got at the end of the last cycle. So this tells me that the Fed still needs to push on this hawkish rhetoric. They're going to need to tighten policy a fair bit in order to pull back on the economy.
Is John Farrow, is Kelsey Barrow more hawkish than Summers?
Perhaps they're on the same page, but Kelsey, what you think they should do and what you think they will do can be two different things. I'm with you on the should. Given what the market's telling us at the moment, what do you think they'll do? What kind of numbers are you looking for on the Fed funds rate?
Sure. So I think that they are definitely comfortable doing 50 basis points at the next meeting. I think that they would ideally like to be above 2% by the end of the year. And I think that the economy will work with them on that. We do still see the U.S. economy as fairly resilient. There's a lot of pent-up demand for spending, particularly on the service side. People do want to get out there and they do want to travel. So this long-awaited move back from the good spending, the pandemic winners, to the pandemic, the reopening winners, that's still really happening right now. And given the fact that wages are rising, the savings rate is low, you know, this is still an economy that's operating above trend that can be resilient to some shocks.
So, Kelsey, that's the reason why I know that Bob Michael likes credit. And I'm looking right now at high-yield bond yields at 6.6%. They have been climbing dramatically. You've also seen investment-grade credit yields rise dramatically. How much do you parse out the value that you're getting by just buying and holding and clipping coupons versus the potential rate shock should the Fed go much more aggressively to curtail inflation?
Yeah, absolutely. I mean, we've seen a massive repricing in yields. You have the high yield index above 6.7% in an all-in yield. You have investment grade credit with yields that are nearly double what they were just 6 or 9 months ago. And so there is a lot more value to that credit now than we had before. And at the same time, the corporate fundamentals remain strong. When we look at leverage ratios, we look at the cash that they have on hand. When we look at their ability to maintain their margins by raising prices, this is not an easy time for corporates, but they're coming from a very strong place.
Kelsey, we've got a real framework of bear markets in equity. In a bear market in bonds, price down, yield up, can there be a catharsis? Like, do people unload bonds in a panic? Is there a history of that?
Well, we are seeing a lack of buying right now, I think particularly from the foreign base. And I know you watch the spread between, or the currency pair, the US dollar and the yen. One of the ways that we're seeing this translate into the bond market from the currency market is that weakness in yen is driving selling from the Japanese investors, selling their foreign treasury bonds, or their treasury bonds. And that is putting further upward pressure on yields when there just isn't a lot of people who are comfortable stepping into this market right now and trying to catch that falling knife.
So, Kelsey, just explain this and let's finish here. Why are you and the team, along with Bob, still so constructive on credit, given everything you've said about core government bonds?
Yeah, so I think right now what we want to have is we want to have that credit exposure, but we want to get it in structures that are shorter duration, that are floating rate, that protect you from what we do believe is still going to be higher yields for now.
Kelsey Barrow, awesome, as always. And before you go, TK, you know the B unit to log into
you log into your,
the Bloomberg terminal.
terminal.
Would you look at this? Kelsey Barrow goes to log into the Bloomberg today.
That's,
and on the B unit, did you see what comes up? Her code today is TANG.
Of course.
That is amazing.
For those of you on radio,
you've run the numbers on that, Kelsey. What are the odds of that?
I believe it's about 1 in 1.6 million.
There we go.
I love
Which is how many tangs I've had on set over the years.
It's fantastic. It's like you see Tang, you do the statistics.
Yeah. Kelsey, if TK ever offers you a Tang before the show, don't drink it.
On Fridays particularly.
Kelsey Barrow of JP Morgan Investment Management. Kelsey, fantastic as always. TK, just some of the risks out there still in the Treasury market. We keep talking about this hawkish Federal Reserve, and that's the pushback that you're getting from some people in fixed income. What hawkish Federal Reserve?
Where will we be in 6 months? Or frankly, John, 6 years. I mean, this is absolutely fascinating. John, I'm going to be adamant about this. None of this is in the textbooks. You look at Pierre-Olivier Gourchass down at the IMF, MIT, PhD. He's got to put together the World Economic Outlook, the Financial Stability Report. None of that right now is based on core theory. We're making it up as we go.
This tightening cycle is so much more different to what we saw in the last 10 years.
Absolutely original.
And not just in the size of what the Fed's about to try and achieve, Lisa, but also the fact that the ECB is going to be playing a part in a different way as well. And the BOJ is doing peculiar things with Governor Kuroda over in Japan.
I love the way you phrase that. Peculiar things.
They are peculiar things. I'm being diplomatic, okay?
No, but honestly, it is true. And it bleeds into, frankly, the yield picture. If all of a sudden Japanese bond yields are more attractive for some of their domestic investors and they stay away from the U.S.
A truly fascinating time for the global bond market, for global markets.
Oh, I thought you meant Brentford.
Full stop. Yes, that's right, Tom. Do you want to talk football later?
When Brentford does a derby, who do they play?
Is that West London?
Yeah.
I don't know who they play. They don't play I mean, if they went down, they'd play QPR.
Arian just emailed me and he says, Tots Brentford, you got to go with Brentford. I'm like, you're kidding me.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The U.S. again is threatening China of sanctions if it offers material support for Russia's war in Ukraine. Deputy Secretary of State Wendy Sherman said China wasn't helping the situation in Ukraine by doing things like amplifying Russian disinformation campaigns. She also promised to help India end its dependence on Russian weapons. In China, demand for oil is falling the most since the early days of the pandemic. Bloomberg's learned that demand for gasoline, diesel, and aviation fuel in April is expected to fall 20% from a year ago. China's zero COVID policy has hobbled large parts of the economy. And in France, Emmanuel Macron is closer to winning another term as president. Nationalist leader Marine Le Pen is running out of time to narrow the gap between them before the runoff elections on Sunday. Polls indicate Macron has about a 12 percentage point lead. Le Pen needed to land a major blow in the presidential debate on Wednesday night to catch up, but failed to do so. France has issued an international arrest warrant for former Renault CEO Carlos Ghosn. 4 others are also sought for allegedly helping Ghosn siphon millions of euros from the French automaker. Ghosn now lives in Lebanon after what was a daring escape from Japan, where he faced charges of financial wrongdoing. Coming up, we'll talk to Carlos Ghosn. That's at 11:15 a.m. New York time on Bloomberg Markets. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
travel across the Atlantic, by the way, is already exceeds 2019 levels, and it's just sort of still opening up. Makes us just feel really, really confident about the outlook. And look, we have all this with still travel restrictions to Europe. Asia is still shut down. It feels like we're in the first inning of the revenue recovery.
Scott Kirby of United Airlines, great to catch up with him just yesterday. The stock yesterday at the close up about 9%. This morning in the pre-market up another 2.2%. And Tom, I have to say, let's be honest, we all like having a back and forth with the CEO, throwing some dirt at them, winding them up, but he's been right. And I've been very wrong. In the last 18 months, TK, he said that business travel would come back. We all shrugged our shoulders and said, okay, good luck. United got that call right in a big way, Tom.
We've got all of our different stories on this, John, but, away from buy, hold, sell, and securities analysis, we all get this understanding of who's winning, and I'd say Delta's winning, United's winning, and most certainly, John, and you've lived this, British Airways, wow, what a disaster.
They got to work out the hospitality story, Tom, the customer service. Across the board, I think everybody's living that right now. Yeah. It's expensive, one, you're paying up for it in a big way, and a customer service has just been horrendous across the board.
Let's get beyond the media generalities now. We do this with futures at -9, and we can do specificity in air travel with Helene Becker, Senior Research Analyst at Cowen. She has decades of experience. Helene, thank you, KJZZ in Tucson. A bit north of Tucson, they had 89 jets in the desert. There are now something in the vicinity of over 400 jets in the desert. Is that the constraint, that they've got to get those jets moved out and redone to straighten out our flying capacity?
No, actually, Tom, that's really not the constraint. The constraint is labor. They don't have enough pilots. They don't have enough mechanics. They don't have enough flight attendants. Flight attendants you can solve fairly easily by opening up classes. It's the pilot situation that's horrendous. We've outed 10,000 pilots over the last 2 years as the airlines encouraged any pilot really that was considering retiring between 2020 and 2022 to retire in 2020. And it takes a long time to qualify as a pilot. Scott Kirby yesterday of United commented that there are 5,000 to 7,000 pilots that are trained every year to be commercial pilot. And if you got rid of 10,000 and you only can manufacture 5, that puts you behind the 8 ball right there. And then when you think about growth and you think about continued retirements and you think about how many pilots American Delta United are hiring alone, each of them are hiring about 2,000 pilots a year for the next at least 5 years.
Yeah.
So it's a staffing issue, and pilots are the most egregious.
Helene, how much are prices on tickets going to go up as a result of some of these constraints and the fact that demand just seems to be surging?
Right. We think fares will go up at least 7% a month through June. And oil prices are going up as well, because not only do you have to hire and retain employees, and that's another thing we're seeing, people jump from one airline to another that we would never have seen in the past. So that, coupled with very high jet fuel prices, everybody's forecasting something in the order of $3.50 a gallon, somewhere between, say, $3.40 and $3.50 a gallon for jet fuel for the second quarter, and we see it there for the rest of the year, which means ticket prices have nowhere to go but up. And yes, there's a lot of pent-up demand, which is a good thing. We think domestic will continue to be very strong. Domestic leisure is above pre-pandemic levels. It's the international and the business that's not. And if you do the math on it, and business comes back to, say, 90%, and international comes back this summer to, say, 60%, you'd be about 3 million passengers a day. And it's not just the airlines, it's the airports that can't handle it. It's the infrastructure. There's TSA that have to be trained. Yeah. There's air traffic controllers. It's really across the board. And to your point, it's a miserable experience to travel, especially when it's so crowded, and we don't see that changing.
Helene, how do we understand price tolerance? We heard from Scott yesterday about the price of fuel. They're unhedged, of course. They're able to pass all of that on to the consumer right now. Is there going to be more tolerance in the business cabin, and will that allow them just to settle things down in the back end of the plane?
Maybe. Of course, the typical analyst, maybe. So I think that as business travel recovers to some level, whether it's 70% or 90% over the next 12 months, that will certainly help the back of the plane, and it will help them at least maintain fares where they are. I think if jet fuel stays around $3.50 a gallon, it encourages the development of sustainable aviation fuel. It encourages the replacement of older aircraft with newer aircraft, and that's another issue. There are delivery delays with the 787. There are delivery delays with certifying the MAX 10. So you still have a lot of issues out there that will keep a constraint on capacity growth. And if you maintain this strong demand, even if everybody just takes one trip a year, you're going to see prices go up. There's nothing else for them to do.
Helene, just a final question for me. It's a bit premature to ask this. I tried to ask this yesterday of Scott when it comes to United. We know how much these airlines spent on buybacks going into the pandemic. I think for United it was somewhere between 8.5 billion and 9 billion over the 5 years into the pandemic. Do you think there'll be a rethink of the strategy around capital returns as they start to experience profits again, given the experience of the pandemic? Have you got a read on that yet?
I think so. I think what happens with capital is they pay down debt. They still have billions of dollars. They talk about their liquidity, right? $20 billion of liquidity, but they still have a massive balance sheet, and they've got floating rate debt that would be paid back first, especially as rates go up. And then they also have a massive CapEx program. It's been reduced because of the delivery delays on aircraft, but you're still talking about $5 billion a year for the next 5 years. So they're going to need to use some of that capital to acquire new jets. So I think I think capital returns on the back burner.
Helene Becker, wonderful to catch up with you of Cowen.
Thanks, Jonathan.
It's been miserable for the industry, for the people working in it. Tom, it's been tremendously difficult. It's been miserable for the shareholder, and TK, things are turning a corner in a big way.
The little quiet thing you mentioned there, John, about debt and what they're going to do this time around is really critical, particularly with the politics in Washington and the bailout of the pandemic. You go to the Bloomberg folks, United Airlines, 72% debt. Yes, there's some leasing issues in there, John, that make it fungible, but that's a ginormous number.
Lisa, this is Bramo's world.
Well, how much does that actually save them from the much thornier political question, which is once they don't have those obligations to pay down, then what do they do with some of those distributions, with those dividend payments that really came under scrutiny when they came under a liquidity crunch during the pandemic?
And that's what you should call the weekly column, you know.
What?
Bramo's world. Hasn't that got a ring to it, Tom?
It'll have like a cloud over
Just sort
it.
of like
It'll be
dark
raining.
grey clouds, thunderstorms as you're reading it, and rain pours down.
It's so dramatic.
With sound effects and everything. Dun,
You
dun.
click on it and it just, electrocutes you.
Futures down 210. I mean, that's dramatic. Yields unchanged on a 10-year, 290.84. Always got to take it too far, Lisa.
Always.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
In the near term, the Fed is going to do what they can to get their credibility back.
The type of inflation that they're trying to control is exogenous.
Food and gas prices are totally out of control of the Fed.
It's behind the curve on inflation in a way that it's never been before.
While the market is not indicating at all recession-like levels at the moment, we do expect some widening through year-end.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrell, Lisa Abramowitz, and Tom Keene. Eventful Friday, 12 days to a May 4 Fed meeting. And John Farrell, forget May, forget the next one. July 27th, it matters. That will be the Fed meeting of the year.
There's a massive call from Nomura out there, Tom. On June 15th, they think a 75 basis point move. The July meeting that you identify on the 27th, they think another 75 basis point move. And they think that comes after a 50 basis point move in May. We know where there is a consensus on the Federal Reserve. It's get back to neutral, get there quickly. How quickly, Tom, is going to be one debate. The second debate, and I think it's the much more important debate, is what you do after that.
Well, it's what you do after that, and of course the timeline here is non-linear, and I'm suggesting, John, what really matters happens in 3 meetings.
I'm suggesting, Tom, we've already seen the peak in CPI, potentially. Maybe it's in a month, maybe in another month, but ultimately it's here. In and around the first or second quarter. And Tom, from there, you will get a year-over-year shift lower in inflation. That's what most people anticipate. But that's only one side of the story. The second part is the more important part. Again, it's how persistent above-target inflation will be into next year. Not whether it has a 2 handle or a 3, whether it has a 4 or a 5.
Exactly.
And whether this Fed will tolerate that. And that's where that division on this FOMC, I think, Tom, is going to grow. There will be some who want to take it way above neutral and others that really don't want to. Some that will be okay tolerating above-target inflation and some that will be very, very uncomfortable in doing so.
And some of them in the minutes and all will be looking at the actual news flow and the actual data coming in. Lisa, we spoke to Adam Poser Rosen in Washington last week prepping up these IMF meetings, and he made real clear we're not getting back to 2%.
Right. He thinks that we're going to see a more persistent 3% or so inflationary environment, which might be okay for the Fed. And this is really where John's point comes into play. How much does that division err to that more dovish, more tolerant level of this higher inflation rate? And that, to me, is what I'm watching. The fact that Hoisington Investment Management came out, long-time, long bond bulls, coming out and saying they are concerned about the outlook for bonds because they are concerned about this dynamic for the Fed, allowing inflation and to run a lot hotter and, frankly, not getting control.
It's a raging debate. John, as we open this hour, I want to go to weak sterling, but frankly, weak yen is way more important into the weekend. I mean, Chinese yuan, I misspoke there. I was thinking in French. I'm sorry. But, John, I look at Chinese yuan, and the fact is it's weakening, and that's a shock of this week.
And lockdowns in China, Tom. Something's happening this week that did not happen last year. That's a weaker Chinese currency. We've seen that through the whole of this week.
Data, NASDAQ a little green. I got nothing, John. VIX 23.07. Give me two items.
Yeah, futures negative about 1/10% on the S&P. The NASDAQ up a little more than 1/10%. No drama there. That's item one. Where there has been some drama, item two has been in the bond market. The 10-year yield fades. We give up the gains of this morning to 291. But on the front end, we've had quite a move this week of almost 30 basis points, up 5 or 6 today to 274.
We'll make our guest special. I was speaking to David Kostin, always a special guest of Goldman Sachs this week. And he and I were talking, John, about the kids that come out of school 2 years ago, 10 years ago, whatever, with prodigious dynamic critical thinking skills. Nobody's like Jeffrey Yu.
Jeff Yu is from another planet, and I'm lucky that he comes down to planet Earth to catch up with us this morning. Senior EMEA Markets Strategist at BNY Mellon. Jeff, great to catch up with you, buddy. Let's get to the heart of the city, and that's foreign exchange. Sterling a lot weaker off some really, really weak data in the UK. I asked this of Jane Foley earlier this morning, Jeff. What's the lesson we're learning from the UK's experience with a hiking cycle very early on in that hiking cycle, and a weaker data that's starting to come through?
Well, the lesson here is stagflation has two parts of it. You've got to focus on the stagnation as well as the inflation. And now, as far as the UK is concerned, looking at the retail sales numbers, looking at the gas bills, which is what everyone's doing probably 10 times a day right now, absolutely, you know, stagnation is coming for the UK household.
Jeff, you so importantly, there are leakages within our certitude. There are things that react and change the story. What are you watching as the metric that will change the story out past July 27th? Is it dollar dynamics, or is it something EM developed nation dynamics?
I think we're going to see quite a bit of chop and change in EM right now. What has been the theme? Stagflation again. So how do you play that through EM? You want to own commodity block currencies. You know, in our positioning indicators in iFlow, every single Latin American currency was overheld, was well owned in the first quarter, but now that's starting to change. We're seeing the Mexican peso starting to fall back. So that inflation protection trade, especially within emerging markets, if you look at the rand, you know, that's probably going to come off now. Are people now looking to go back to Asia, ex-China?
Exactly. What do we do about Pacific Rim ex-Japan at a 128 out to 130? What does Sing dollar do, just as one example?
So you look at where dollar yen is right now, and people are thinking, okay, are the German car manufacturers telling the ECB to call the BOJ? No, this is the wrong continent. Places like Taiwan, like Singapore, Thailand, you know, these are areas where every 1% move in dollar yen higher actually offsets any benefit they get from dollar stronger as well. So weaker yen hurts them arguably more, certainly more than the US and the Eurozone. So this is where the intra-region dynamics are in play. But we like Southeast Asia potentially as Thailand continues to open up, but also, you know, places like Thailand, Korea, the tightening places. You know, these two economies really pushing forward right now. You want to own them.
Jeff, a lot of investors have been tying Japan and some of the dynamics there into the U.S. bond market, saying they are the biggest buyers of U.S. treasuries, and this is because of the currency adjustments over history. This dynamic of a weaker yen changes that dynamic dramatically. How much do you think that's going to influence the long end and send yields higher?
I'm actually not too focused on the Treasury market, but you're absolutely right in saying Japanese and also I'd add Taiwanese and Korean investors, those big Asian savings pools, it's not the Treasury market you should look at. It is US high yield. These are the areas where Asian investors have been picking up coupon over the last few years. Now we're seeing spreads widening. If they begin to exit, if they begin to repatriate to stabilize things to some extent, then the widening that we're seeing due to the Fed right now in US corporate spreads, that's going to accelerate because the Asian bid is gone.
Wait, Jeff, let's sit on this for a minute. And are you saying that basically the stronger that the dollar gets and the more you see yields continuing to climb and the opposite happening elsewhere, you are going to see more and more weakness in the credit space that perhaps isn't fundamentally driven, but simply a supply-demand dynamic?
Because if you look at, say, Korea, if I'm a Korean and a Taiwanese investor right now, finally I'm seeing some movement in my own yield curve. While the dollar is strong, while I have good total returns, if I add my coupon, my duration, plus my FX, it's looking pretty good right now. Let me get out, while the Fed is still not, really pressing the pedal in terms of tightening, and capture some of my own yield onshore where I don't have to take into account the FX risk. For Japanese pension investors, maybe they can take into account the higher yields, that same dynamic. They're not getting tightening in Japan via rates, but they can top that up with a higher dollar yen at the same time. So that flow moving out of US treasuries for sure, but also corporate high yield going back to Asia while they're taking profit on a very structural multi-year total return trade, that is something that could exacerbate tensions in the US credit market.
Jeff, this is potentially a massive shift. One thing we haven't mentioned is what you think this means for the US equity story.
Well, the U.S. equity story, I think, that if I look at the what iBoxx high yield, it's underperformed the S&P by about, I think, 6 percentage points this year already. So, but this wasn't always the case. This has been more recent. So the two were working in lockstep. So from the point of view of an international investor, now you're seeing differentiation. So now that the tightening in U.S. financial conditions is finally moving from equities to corporate spreads, that is the fourth shoe to drop, basically. I think they're going to be more attuned to that. So I would expect corporate credit to underperform equities much more up ahead.
Jeff, final question from me. Have you got a number in mind for the peak of the Fed funds rate in this cycle? Do you have a number in mind?
So I would actually you pick a number where terminal rate, where neutral rate is, say you want a 3, then you add potentially 100, 150 basis points above that. That's where it is. Absolute basis, absolutely true, but on a relative basis, relative to neutral, Fed will be restrictive to bring down inflation. That number is the one that you need to have in mind.
Jeff Yu, FBNY Mellon. Jeff, thank you, sir, as always. Just a clinic TK on what Jeff's looking for.
Well, the dynamics now are so uncertain. What I love there, and we've heard this twice this morning, is you can't look at some of these things as an amorphous blob. EM is not emerging market or whatever fancy name you want to brand it with. It's right now this split between commodity haves and commodity have-nots. And frankly, John, it's more complicated than that.
It's way more nuanced than the conversation we're having. At the surface, this is about a Fed that's going to hike 50 basis points, expeditiously get back to neutral. Lisa, the real debate happening in fixed income, the real divide of people on Wall Street, professional investors, is what happens after that. After you get to what the Fed thinks is neutral, which is something in the low 2s, where do they go from there?
And it's so dependent not only on the U.S. economy and how resilient it is, but frankly how the rest of the world does and how resilient their economies are. Because if you get that stronger dollar, I'm just still thinking about what Jeff Yu is talking about, that leads to a less attractive investment thesis for overseas investors that have supported a lot of these markets. So would a strong dollar lead to actually more weakness within the credit markets? It's sort of counterintuitive, but it's something a lot of people are looking at.
And the international investor flows are going to be pretty fascinating through the next 12 months. That's for sure. Down about a 1/10 on the S&P. On the Nasdaq, up about a 1/10. No drama here in the equity market. That was the story yesterday too. Things were calm. They were okay. The earnings were nice, and then the equity market was up at the opening bell. And then the back half of the day, Tom, just faded and faded quickly.
We've been remiss today. There's so much going on in macro, John. The individual stock stories, whether it's Twitter and Musk and all that, or the Netflix debacle. I mean, the individual stock stories are fascinating.
Couldn't agree more. Yields up about a basis point, Tom, on a 10-year to 2.92. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro on this Friday morning with equities doing okay. Good morning to you all. Heard on radio, seen on TV. This is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Fed Reserve Chair Jerome Powell has outlined his most aggressive approach to taming inflation to date. He has potentially endorsed 2 or more half percentage point interest rate increases. At the same time, Powell described the labor market as overheated. The Fed chief is taking direct aim at strong demand that the central bank wants to cool. According to an audio recording, House Republican leader Kevin McCarthy said 4 days after the Capitol riot that he'd urged then-President Trump to resign. The recording was first reported by the New York Times and later played on MSNBC. Before the audio was broadcast, McCarthy tweeted that the report was totally false. In public, McCarthy opposed removing Trump from office. Over in Germany, Chancellor Olaf Scholz pledged to continue shipping weapons to Ukraine, but he says that direct military confrontation with Russia that could lead to nuclear war must be avoided at all costs. In an interview with the magazine Der Spiegel, Scholz also reinforced his rejection of an EU embargo of Russian gas. And Elon Musk's attempt to buy Twitter has gone a lot more, well, real. The world's richest person has lined up more than $25 billion in debt financing from Morgan Stanley and other financial institutions. Musk also is pledging to contribute another $21 billion. That would be of his own money through equity financing. Twitter says its board will review Musk's proposal. And American Express spent heavily on rewards and other perks in the first quarter to attract and retain customers. Expenses for the first 3 months of the year soared a bigger than expected 34%, but that fueled a 29% increase in revenue that also beat estimates. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Today on Bloomberg, Treasury Secretary Janet Yellen speaks live with Bloomberg's David Weston. Tune in at 11:45 Eastern on Bloomberg Television and Radio. Bloomberg, your unmatched source for global financial news.
What Russia is doing in Ukraine is appalling. There should be no appeasement of Russia because we have to deal with economic problems as a consequence of what's going on.
Governor Bailey there of the Bank of England. Problems abroad and some big problems at home. The data in the UK this morning, not very good at all. Consumer confidence, the lowest since 2008, and retail sales uglier than expected. From New York this morning, good morning. Equity futures unchanged on the S&P. I'll keep this brief and snappy for you. The Nasdaq advancing 1/3% after fading aggressively in the back half of yesterday's session. Yields are higher by a single basis point on a 10-year this morning, Tom, 292.
Chinese yuan 6.50, maybe capturing the foreign exchange angst and EM as well. This is a joy. Alexander Vindman has lived the divide of Ukraine and Russia from his childhood. Call it the vicinity of Neptune Avenue in Brighton Beach. The gentleman of Brighton Beach with a sterling set of academics, his public service to the nation in war, and also a tour of duty at a contentious White House. The Lieutenant Colonel joins us this morning, the former Director of European Affairs for the U.S. National Security Council. Lieutenant Colonel, thank you so much for joining us this morning. In the media right now, in the zeitgeist of this weekend, what are we most getting wrong about the new war in Ukraine?
I think in part the comment from the Bank of England is about right. This isn't just a war between Russia and Ukraine, an unprovoked war against a democratic country. It's a war against the democratic system, and the costs are going to be borne by the whole world due to Russia's unprovoked attacks. So I think it was wishful thinking from the beginning that this would have not spill over. This would be limited to the largest country in the world attacking the largest country in Europe. We should have all prepared our populations, our people, for the fact that this was going to have significant ramifications, including inflation, including spikes in oil and gas prices and commodity prices, and warned them that this is a war between systems.
I want to not dive into the White House and look back to the Trump administration, but I do want to talk about what we found on this show, the commonality of Obama and Trump administration, international relation experts who say we are overplaying the worry of a World War III. Do you worry of a World War III, or is that overdone by non-military professionals?
It's overdone, and it's also overdone by politicians with the intent of casting their limited contributions or limited actions, reactivity under the guise of avoiding World War III. I think it's just a convenient way to warn off a public that's not well versed in what Russia's thresholds for confrontation are, by saying that we could stumble into World War III. I frankly find it hard to believe for sophisticated actors to think that we are that close to a World War III, a hot war scenario. We can get there. We can get there over a protracted war over the course of months and maybe years as Russia continues to be provocative. But we are nowhere near that kind of scenario because, frankly, Russia has zero interest in a confrontation with NATO. They like to use it as a foil. They like to point to NATO as the belligerent and that NATO is the one that's attacking them. That kind of, in a way, justifies why they're stumbling so badly on the battlefields, because they're fighting not Ukraine, but they're fighting all of NATO. But they don't want that direct confrontation because it's a much, much more powerful alliance.
Alex,
than what they're even facing in Ukraine.
what do you think that NATO then should be doing that they're not under the guise of trying to avoid World War III, I should say?
Well, it should be a full court press. I've written about this relatively extensively. One of the things we should be doing is we should be offering a Lend-Lease program. It's been passed by the Senate, hasn't been passed by the House or signed into law yet. And the idea would be to warehouse everything that Ukraine needs. We know how to fight wars. The U.S., NATO knows how to plan and fight wars. We know the kinds of equipment that Ukraine could use as this war continues to unfold. We warehouse it in a way where Ukraine could draw on it as needed. It doesn't have to go through kind of a peacetime, laborious, bureaucratic requisition process that then needs to be staffed and evaluated and appropriated and then transported. It should be already there for the Ukrainians to draw on. And we should also be doing more than what we're doing with kind of replenishing lost weapons stocks from these 7-8 weeks of war. We should be providing Ukraine with more advanced weapons so that they could end this war quickly. Because frankly, fundamentally, if Russia is defeated on the battlefield, if Russia runs out of troops, runs out of tanks, runs out of planes, that's how this war ends. And we could help arm Ukraine to do that in a short order rather than a protracted war where Russia still sees opportunities for victory, could draw on its population of 140 million to replenish personnel losses and these vast depots, as far as the eye can see, of Soviet-era equipment.
Lieutenant
we need
Colonel,
to help Ukraine win.
some people say that there will not be an end until Vladimir Putin is no longer the head of Russia, that he will not back down, and any defeat will just cause him to re-up the ante in terms of what he attacks Ukraine with, as well as the rest of the world. How do you push back against that in terms of arming Ukraine and just saying, end this?
That's false. We've stumbled into this confrontation with Russia. We, as in the Western system, Ukraine, frankly, didn't have as much of a role. It's the weakness, perceived weakness on the West. It's because we did too little, not that we did too much. If we had done more to warn off Russia, we may have even managed to avoid this war, especially over the long history of President Putin's tenure. In reality, the way this ends is maybe the way it seems to be winding down in Mariupol. I mean, this is something I've been saying for a while. Putin could just throw his hands up and cheer on his military. He's taken Mariupol, even though he hasn't, and say that he's moving his forces elsewhere. This is the way it ends. Is that Putin's military is out of combat power. His military tells him he has no place to go, and he declares victory and says, throws a parade for his people. He says that he's denazified, he demilitarized Ukraine. It could end that way in the course of weeks if we help Ukraine get there. Otherwise, it does turn into a protracted war where Putin resorts to his comfort zone, incrementally doubling down, looking for vulnerabilities, probing. And that's how the U.S. and NATO get drawn in, because he's going to cross some sort of a threshold in his testing and his prodding. If he feels vulnerabilities. If he feels strength, he's not going to push towards strength.
Alex, it's wonderful to catch up with you, sir. Absolutely tragic right now in that country. Alexander Vindman, an important headline crossed in Bloomberg. I want to get your attention, bring your attention to. The market is pricing in now 4 50 basis point rate hikes, a fourth one in September.
Yeah.
Citi came out with this call a number of weeks ago. Andrew Hollenhorst, you will remember that? 4 back-to-back 50 basis point interest rate hikes. And there was a lot of pushback. Tom, that's what the market's priced for now.
Yeah, I'm looking at this geometrically, John, and forget about the calendar dates. July 27, September 21, November 2nd. I am talking, and we talked to Lisa about this at the beginning of the hour, the lengthening of substantial inflation. Let me make that up as the lengthening of inflation over 3.5%. Over 4%. That's a story of this week.
We'll continue this conversation with Glenn Hubbard of Columbia Business School. Looking forward to that. Perfect timing. Futures unchanged on the S&P. Yields unchanged on a 10-year. Much higher on a 2-year. From New York City, this is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping. But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
From New York City this morning. Good morning on TV and radio. Here's the price action for you this Friday morning, going into the weekend with equity futures unchanged on the S&P 500, on the Nasdaq positive by about 1/3 of 1%. We saw this movie play out yesterday, where things were okay in the morning and then faded aggressively in the afternoon as yields picked up. On the front end of the yield curve, higher again on a 2-year by 5 or 6 basis points to 274, up almost 30 basis points on the week on a 2-year. On a 10-year, yields lower by about a basis points, just about below 290. Drew Mattis of MetLife just wrote in on the pricing of Fed hikes and said the following: outside my window we have war, famine and plague. People are making some great assumptions about normalcy that would allow these hikes. We'll see what they do if equities don't hold up. TK, just one view out there at the moment.
And again, it speaks to the unexpected and the complete, not chaos, but John, the randomness of where we're going to be on July 27th.
It's a race to neutral, Tom. We keep repeating it. They want to get back to neutral, whatever that is. And then what? And that's the big debate.
We will stop here with a student of this nation. He is without question the most articulate conservative economist. We have Glenn Hubbard joins us from Columbia. His service there as Dean of the Business School, former chairman of the Council on Economic Advisors. And I really can't say enough about his book, The Wall and the Bridge, where he leads off with the walls come a-tumbling down and Mr. Gorbachev tear down this wall and how we have circled around to the chaos of the day. Glenn Hubbard, I want to go back to your Florida and my Western New York long ago and far away of 1978, where Milton Friedman just simply said, what is the right policy now? The policy showed up 1 year later in the form of Paul Volcker. Where is today's Paul Volcker?
Well, I think the Fed has now understood that it's been behind the curve and needs to step in. I do worry that the period from 1975 to 1983 is more instructive than people might think for today. I think it's a little naive to think if the Fed wants to crush inflation, that 200-ish basis points in the Fed funds rate is going to do that. So we'll have to see. But I do think the Fed has the courage to act, and I don't think the market should take comfort in that.
I'm not going to jinx you, but I'm not going to mince words. With a Republican president, you're shortlisted as chairman. There's no other way around that. Chairman Hubbard, let me make it clear. Volcker had 12% yields or whatever they were. Powell has 1% yields, 2% yields. We can't do what Volcker did, can we?
Well, it's difficult, and I'll tell you why. Not so much about the Fed's courage, but about other things. For example, fiscal policy in the budget. As the Fed tightens, the federal deficit gets a lot worse. We've shortened the maturity of the debt. We have a very large debt today relative to what Paul Volcker faced. There are also issues of how much of a recession the Fed is willing to tolerate. If the Fed wants to get back to 2% inflation, I find it hard to believe that a soft landing is possible.
Glenn, what does that mean? You were saying, and I want to pick up on this idea of the fact that there seems to be complacency in certain risk assets. Where is that complacency? How disruptive could these tightening cycles be for markets?
Well, a lot depends on how far the Fed feels it has to go. You mentioned before about the possibility of several 50 basis point hikes. I think the Fed will take a look and see what's happening in the economy. But I don't think we're in stagflation right now. I think we're in an inflationary boom. I think there's a lot of wind at the back still. So I do think the Fed is going to have to take fairly bold action, not like Paul Volcker, but pretty bold.
Do you believe that Bill Dudley is correct that we're going to see 4% Fed funds rate over the next 2 years?
I don't think you could rule it out. I think it depends, obviously, on geopolitical events that none of us can sit here and forecast today. But I do think that the Fed should be prepared to do what it takes and have the market believe that it will do what it takes to put the inflation genie back in the bottle.
Glenn Hubbard, moments ago, a world-class economist, Ingves of Sweden in the Stockholm School, just came out with a stunning headline which directly addresses this theme. Dean Hubbard, Ingves of the Reichsbank says, not a period of normalization, but a new policy. Is that really what we're talking about here, is we need to make up a new policy, original economics?
I don't know that it's a new policy as much as going back to being serious about the factors that cause inflation. We got this inflation because demand was growing too fast relative to supply. It's not even that complicated. It's not all Vladimir Putin, and it's not all supply chains. And so I think it's more a matter of getting back to basics, to be honest.
Okay, so we had a big fiscal impulse. What is the Hubbard prescription, away from the politics of it all, to diminish this inflation down to, say, 3% or lower?
Well, we will already see a winding back of some of the fiscal impulse simply because we won't likely see additional stimulus. On monetary policy, the Fed has to follow through that it's very serious and that it's not simply underwriting a put for the stock market every time financial markets have a hiccup.
We're speaking with Glenn Hubbard of Columbia University, and we're talking about the new dynamic and what the Fed is looking at with respect to inflation. What about the labor market? You write about economic bridges, and the economic bridges at a time when participation rate remains well below where we were pre-pandemic. How does the Fed effectively curtail inflation while allowing that participation rate to get back to something that is more representative of a robust economy?
Well, it's a good question. Participation is a critical social issue. I don't think letting the economy run hot is going to fix the participation problem. There are things that can, training, education, a lot of fiscal interventions, but they're really not in the Fed's toolkit. The labor market, as the Fed should see it, is actually running quite hot. It would be better if the administration focused more on participation, but so far not.
How much has the Fed lost credibility in trying to address issues that really are only addressable on the fiscal side?
Well, I think the Fed still has abundant credibility with the public. I really do. I think the Fed's conversion recently has helped that. But I think the Fed does itself no favors when it tries to widen its role in issues that are really more for fiscal policy. If members of Congress and the administration won't do the right thing, that's not an excuse for the Fed to step in.
Glenn, we had an interesting debate yesterday with Claudia Sahm out of the Michigan Academic Essex, Matt Shapiro, Kimball, and the rest of them out there. And she was really quite heated about the policy gloom of stagflation. Now, is it precisely Hubbard economics? No, it's not. But what does the stagflation gloom get wrong?
Well, I think if you start at where we are now, I think we're in a classic inflationary boom. We've seen fairly good numbers for output, for jobs.
Right.
We're running ahead of potential growth. We're in an inflationary boom. We're not in stagflation.
So, Glenn, this is critical. Do we underestimate grossly, Republicans, Democrats, economists of all persuasion, do we just simply miscalculate the technological impulse that's making this so difficult right now? The benefits and the hazards of a technology revolution over decades?
I think we do, Tom. I think that technology has been an enormous source, obviously, of productivity growth. I'm very optimistic for that going forward. What makes me worried is not science or economics, it's politics. Whether we figure out how to help everybody get involved in the gains from technology, that's really where the political disruption is coming from.
Yeah, John, I think this is so important, this idea of the political disruption of technology. It's something Glenn's written about for years. And to me, John, it crosses all politics.
Just wonderful to catch up with Glenn, as always. And Glenn, we have to go, so thank you, sir. As always, Glenn Hubbard there of Columbia. Fantastic on the Federal Reserve and beyond. Tom, a little bit later this morning, 9 a.m. Eastern Time, the ECB President, Christine Lagarde, will speak. Then 10:30 Eastern Time, the Bank of England Governor, Mr. Bailey, will speak. Now, Lisa, there are some big questions about how much further the Bank of England can go already, given where the data is in the UK.
Given the fact also that they are tightening into weakness, at the same time it is inflation, right? If their job is to curtail inflation and they are seen as not hiking rates, what are they doing, right? I mean, how can you then maintain a mandate that is to curtail inflation?
The Bank of England already facing challenges to its rate hiking cycle. The ECB hasn't even started yet, and we've got this big slowdown emerging in China this year with the lockdowns in Shanghai. They're the challenges, Tom, for those two central bankers this morning. How does Christine Lagarde communicate tighter monetary policy, given what's taking place in that economy and abroad?
I think this is the common ground here, John, between Paul Krugman and Glenn Hubbard is they will wait and look at the data. They are, by definition, ex post. They can get out front and pontificate all they want. They're going to wait to see the data, including inflation rolling over, which is maybe a consensus presumption right now.
The word consensus is interesting because it shifts fast. A month ago, when Andrew Hollenhorst of Citi came out with that 450 basis point hike call at the Fed, people laughed, and now the market's pricing it. Today, the ECB thinks they're going to hike interest rates potentially this year. And when you throw that at an investor, a market participant, the doubts about the ECB's ability to get rates above zero are still humongous.
They are, and that's a very important word, that CFA level 4, humongous. John, the consensus shifts between the time you walk to your next property. I mean, you know,
I'm walking
whatever
there
the
now.
property. Well, it's Friday. You got a lot of properties going on.
I do.
You know.
Would you like to do one of them? You could do Bloomberg Real Yield at 1 p.m. Eastern Time. Does that take your fancy?
No,
Would you like to host that show?
I'm deep into the surveillance
You're busy.
app at that time.
Okay. Mohammed Al-Erin joins us a little bit later this morning, of Bloomberg Opinion
I know,
columnist
he emailed me and told
and
me.
president of Queen's College, Cambridge.
He informed me.
Because you did something really silly. You suggested that Mohammed got more sleep than you did.
Well, he does.
And knowing his schedule, Tom, I don't know anyone that lives on
John,
as little sleep
the
as
issue
he
here
lives
is
on.
he is all Brentford against the Tots this weekend. You know he is.
You think he's supporting the other side?
Yeah, they're near QPR and all that.
He is a QPR fan.
He is.
I'm not sure that he supports Brentford, though, Tom.
Against the Tots, he supports
I'm
anyone.
sure he's not supporting your team. That's for sure. I'm looking forward to catching up with him a little
Arsenal,
bit later.
Tots, May what,
May
11?
12th. May 12th in the evening, if you want to go there. Are you trying to get Spurs to send us tickets?
No,
Obviously.
I think, you know,
And a
Mr.
road trip.
Levy.
Is that what?
Obviously, and a road trip.
Have you got a message from Mr. Levy? Okay.
Al from New Jersey. Call Al from New Jersey.
And get us tickets.
Yes, absolutely.
Okay, we'll try and work that out, Tom. Tom, what are you doing on Sunday? Dimanche.
Dimanche? I'm going to be
Dimanche.
watching the election.
Of course. Special coverage coming up on Sunday with Francine Lacroix. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ruchika Gupta. The U.S. again is threatening China of sanctions if it offers material support for Russia's war in Ukraine. Deputy Secretary of State Wendy Sherman said China wasn't helping the situation in Ukraine by doing things like amplifying Russian disinformation campaigns. She also promised to help India end its dependence on Russian weapons. In China, demand for oil is falling the most since the early days of the pandemic. Bloomberg's learned that demand for gasoline, diesel, and aviation fuel in April is expected to fall 20% from a year ago. China's zero COVID policy has hobbled large parts of the economy. And in France, Emmanuel Macron is closer to winning another term as president. Nationalist leader Marine Le Pen is running out of time to narrow that gap between them before the runoff elections take place on Sunday. Polls indicate Macron has about a 12 percentage point lead. Le Pen needed to land a major blow in the presidential debate on Wednesday night to catch up, but she failed to do so. And France has issued an international arrest warrant for former Renault CEO Carlos Ghosn. 4 others are also sought for allegedly helping Ghosn siphon millions of euros from the French automaker. Ghosn now lives in Lebanon after what was a daring escape from Japan, where he faced charges of financial wrongdoing. Coming up, we will talk to Carlos Ghosn. That's at 11:15 a.m. New York time on Bloomberg Markets. And billionaire George Roberts is donating $140 million to his alma mater, Claremont McKenna College in California. The co-founder of KKR graduated from there in 1966. The money will be used to help the liberal arts college develop athletic facilities and campus buildings. Roberts gave $50 million to Claremont in 2012. Global News 24 hours a day, on air and on Bloomberg Quick Take. I'm Rachel Gupta. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon. Can ESA help humanity take its next giant leap?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
The rebuilding costs ultimately in Ukraine are going to be enormous. And certainly looking to Russia one way or another to help provide some of what's necessary for Ukraine to build is something I think we ought to be pursuing.
The Secretary of Treasury, who I still call Chair Yellen, there with some really important nuance moving forward the story of the United States and this war in Ukraine. Again, a conversation with Janet Yellen, I believe later today on Bloomberg with David Weston. Right now, and this is important because it speaks to the heritage of the nation, if long ago and far away you are an Asian and you come in through Ellis Island and end up in Stockton, California, and if you're possibly better than good at mathematics, maybe you go to Washington. And it was not Mr. Smith goes to Washington, it was Mr. Singh goes to Washington. Dalip Singh's great-granduncle was the first Asian in Congress back in 1957. It is a heritage of academic excellence. Dalip Singh joining us now from the White House is Deputy National Security Advisor on International Economics. Dalip, your title is baloney. What you really are is the most knowledgeable person about the sanctions that we have on this war on Ukraine. Give us an update this morning. Are our sanctions working against Mr. Putin?
Yeah, you've oversold me, Tom, but thank you for that introduction. Yes, the sanctions are working, but let me explain the objectives. We had three going into this invasion. One is leave Russia, leave the world knowing that this invasion by Russia would be a strategic failure, galvanize and unify the West, and have Ukraine emerge as a sovereign nation. Now, the sanctions, they're having the debilitating hit that we expected. The economy is going to contract by double digits. Inflation in Russia is at 17.5%. You have more than 750 companies that have already fled Russia. More than 200,000 of Russia's best and brightest have exited. The country's on the cusp of default. The country is becoming isolated into a pariah state. If this is the end game that Putin wanted, I think it was a big miscalculation.
Mr. Singh, you are front and center, and particularly with your family's heritage, of the need for the White House in America to convince India to hold back from the behavior maybe of the last number of weeks since February 24th. What is the Biden administration's plan to convince India to support our sanctions, to support this allied effort?
Well, India is a friend and a partner. I have deep personal affection for India, as you're alluding to. But look, this is not about the unilateral exercise of American financial force. Our conversation with India is, look, we're trying to uphold and defend the core principles that underpin peace and security for all of us. That's a shared interest with India. We've also pointed out that as Russia becomes China's junior partner, and as Beijing has more and more leverage over Russia, that's not going to play to India's benefit. So we want to step up for India, help it diversify away from Russian. The amount that India imports from Russia in terms of crude oil is a very small percentage of the total, 1 to 2%. Just like we're doing with Europe, we want to step up for India and be a friend and a partner. And I think if we do that and we work together on the spillovers from energy and food and migration and anchor the economic relationship we have with India, over time, we think if we play the long game with India, it'll accrue to our advantage.
Dalip, is it the same story with China?
Well, look, China has a choice to make. If it's serious about upholding the principles that it espouses, sovereignty and territorial integrity, this is the moment to show it. Europe is watching, the U.S. is watching, the world is watching. Are they serious about these principles? And do they care about the spillovers, the global spillovers from Putin's war in energy markets, in food? You know, they already have a homegrown supply shock from the zero COVID policy. Do they want to add to that shock? So we're watching very closely. We have options in case China actively attempts to undermine our sanctions or backfill those measures.
What are those options, Dalip?
Well, I don't want to specify what those are. I think you know what they are. We have a range of tools, including secondary sanctions. We always carry that stick, but we don't wave it around.
So, but that's the key, and you don't wave it around, you carry that stick. But there's this debate going on whether to ease Chinese sanctions to actually, or Chinese levies anyway, in order to reduce the inflationary pressure on one hand, while also threatening sanctions on the other if there isn't a more active pushback to what we're seeing in Russia. How does that balance get adjusted? How active are those conversations that the administration is having with China right now?
You're asking about the Russian sanctions, right?
Well, Treasury Secretary Janet Yellen actually talked about the potential for putting some restrictions even on China should they not come out more actively or undermine the allies' efforts. And I'm wondering how much those are discussions right now.
Well, look, our first and best option is diplomacy. So our efforts, I think as the Secretary was alluding to, are to broaden the coalition of countries that are applying the sanctions. That increases the direct impact. It also increases the indirect signal that this is, again, not just a U.S. effort. This is a shared global desire to impose costs on a country that's brutally invaded 44 million innocent people. Right. Now, she mentioned a range of options that are at our disposal if China or any other country attempts to undermine our efforts or tries to backfill the export controls. But I don't want to go any further than that.
Mr. Singh, thank you so much. Too much to talk about. We hope to speak to you again soon. Dalip Singh is the White House Deputy National Security Advisor. And I kid you not, folks, he is arguably the #1 person we have on the many nuances of these sanctions. Lisa, that's something I've got to read about. I'm absolutely baffled about which sanctions work, which sanctions don't, et cetera. To me, it's, you know, even with Dan Tannenbaum's great effort, it's confusing.
What you mean by work, though, is key here, because it's a risk-reward equation. Are they hurting their effort? Are they hurting Russia's invasion of Ukraine more than they are hurting the U.S. and European economies? That risk-reward is unclear. It is clear that it is hurting the Russian economy, but this really is the key argument in why there has not been a full ban on oil and gas imports from Russia, certainly with respect to Germany, because they're saying it would throw us into recession, and they're not willing to do that just yet.
And you mentioned the partition there between gas and oil, natural gas and oil distinctions, and I would say, Lisa, part of it is through the week Brent crude 107, and if we get any kind of further lift, and dare I say breakout through in America, AAA unleaded's high price of a number of weeks ago, that would adjust the conversation.
It will adjust the conversation. What I find interesting is that we're seeing crude prices come down, and perhaps Amrita Sen is right. Maybe this is a technical issue, something with liquidity, but maybe this is a realization that they're not necessarily going to be wholesale bans on Russian energy imports right now, because frankly, a lot of economies just can't withstand that.
It is incredibly fluid, no pun intended. Look at the real yield, 10-year real yield, negative 0.13%. That's maybe a new, larger negative number off that positive moment.
Yeah, honestly, it's just been an amazing market. It's certainly in the short end space too. I've just been watching that 2-year yield as everyone out-hawks each other.
The 10-year yield 2.91% there. Futures at -11. Dow futures -119. The VIX was what, 19 for a moment. And with all the individual stock stories as well, we back up 23.25 on the VIX. Please stay with us through the morning at 11:45 this morning. A conversation with the Secretary of Treasury. This is Bloomberg.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Live from New York City this morning. Good morning, good morning. The bond market selling off, the equity market just about holding up. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York, we begin with the big issue, investors dumping global bonds.
There's a global bond sell-off.
When you look at what's happening in the bond market, we've had a tremendous backup in yields.
We are in a bond bear market, that's for sure.
Demand for bonds is evaporating quickly.
The yields keep going higher.
The underweight on bonds is quite clear.
Not easy out there for bond investors at the moment.
The Fed officials are coming in with more and more hawkish talk.
We're seeing every other central bank raising, rates.
Those interest rates have to get ratcheted up.
When you see yields do what they've done so far this year,
it's been the worst start to the bond market for the most part in history.
It's down 10% for the year. That is an extraordinarily large move for the bond market, and it's only the middle of April.
I don't even think bonds are a good place to be at the moment.
Joining us now to discuss Franklin Templeton's Sonal Desai, Colin Martin of Charles Schwab. Sonal, straight to you. You've said for a long time you don't think this Federal Reserve is hawkish enough. Why?
Well, I have said this was based on what happened in January, February, March. We continued to see the Fed increase the size of its balance sheet. I don't think they moved swiftly enough, even after they acknowledged that inflation was not transitory, belatedly. They did acknowledge it. And I think that the dot plots, the last set of dot plots, actually sent a bizarre signal. Essentially, we had inflation coming down almost by itself while rates remained quite negative in real terms. And the terminal rate, the median terminal rate in those dot plots was nowhere near, I thought, enough to bring inflation down.
Colin, can I bring you into this and just build on what Sonal just had to say? Do you agree with this? When you look at what's happened in the front end of the yield curve, we've built a lot in. When I look at things like break-evens, there still seems to be some concern there about inflation. Do you see that too?
I do see some concern there, and I think that's certainly concerning for Fed officials. Even though we've seen inflation, continue to surge this year and go much higher than what inflation forecast by the Fed were indicating, for a while they were making the point that inflation expectations remain well anchored, and I think it's difficult for them to continue to make that point. With the 10-year break-even rate now above 3% for the first time ever, that's clearly not the case. So despite the significantly hawkish pivot by the Fed, despite the expectations for 10 more hikes just this year alone, the markets are still seeing inflation as somewhat elevated over the next 10 years. So it seems like that's a little bit concerning right now, and it hasn't necessarily pulled down those inflation expectations, which is what the Fed's really trying to do.
And look how quickly the consensus has changed in a single month. A month ago, Citi's Andrew Hollenhorst came on this program going into the weekend and talked up the potential of 4 back-to-back 50 basis point increases. About a month ago, there was a ton of pushback against that call to what Andrew had to say. And now look at where we're priced. We're basically priced for everything he was talking about. 50 basis point hikes in May, June, July, and September. What's interesting from here, and Sonal, I'd be very interested to get your input on this. For me at the moment, this is not about how we get to neutral, but that's what we're talking about here, whether it's 50 basis point hike increments, 75 basis point hike increments. It's about whether they go beyond that. And Sonal, that's what you're laser focused on too. Do you think they can take it beyond what they think neutral is?
Look, they have to. Jonathan, it's not a question anymore of do they? They have to if they want to bring inflation down. First of all, neutral is a fairly, I would say it's a concept sometimes, right? It depends on the time of the cycle you're in, what the neutral rate, what the long-term growth rate is. It depends on so many different factors. Bottom line is, if they believe that neutral is something like 225, 250, there's no way you can stop at 250 and bring inflation down right now, because it's true, the inflation expectations have started moving. And I think if we start seeing those famous COLA, cost of living adjustment increases, work their way into what employers pay their employees, this thing is going to start taking slightly longer routes, and that's a problem.
Next stop, May 4th, for the Chairman of the Federal Reserve, Jay Powell. This is what he had to say on the prospect of a 50 basis point hike.
It is appropriate, in my view, to be moving a little more quickly, and I also think there's something in the idea of front-end loading whatever accommodation one thinks is appropriate. So that does points in the direction of 50 basis points being on the table. Certainly, we make these decisions at the meeting, and we'll make them meeting by meeting, but I would say that 50 basis points will be on the table for the May meeting.
Kelly Lyons, it's on the table for May.
It's on the table for Jay Powell. It already has been on the table for this market, John. They have been pricing in 50 basis points in May for some time. But as you alluded to, it is no longer just half point in May that the market is expecting. They're expecting another 50 basis point hike in June, another in July, and as of this morning, another in September. Geared up for 4 consecutive hikes of that magnitude, which would be about 200 basis points, bringing the upper bound to 2.5%. It's no surprise, given how dramatically that has changed, that we've seen such dramatic changes in the short end of this yield curve, which of course is more reflective of Fed policy. The 2-year Treasury yield is at more than 200 basis points just year to date, and it's only April 22nd. That is how quickly we have re-rated. Now we're north of 275, which is the highest on that 2-year yield, going all the way back to December of 2018. So clearly, John, this is a market that is anticipating quickly aggressive tightening of policy. But the interesting thing is there's still such a long way to go to actually bring conditions into tighter territory. What we're looking at here is financial conditions. We can see they aren't quite as loose as they were in the back half of 2021. So yes, they have tightened some in recent months, but relative to history, all things said, financial conditions are still incredibly easy. So it'll be interesting to see how quickly the Fed is able to change that, John.
Kelly Lyons, thank you. Is 75 the new 25? Only a month ago, 50 was the new 25. This is what Nomura had to say overnight. They're calling for 2 75 basis point interest rate hikes after a 50 basis point hike in May. They think in June and July they go 75, they go 75 again. Colin Martin, we're listening to this. We're building a lot into the front end. Kelly Lyons just went through what's happened year to date on a 2-year, up 200 basis points, up another 30 this week alone. I'm much more interested now, Colin, on what you think is going to happen with the long end here. Whether you think the Federal Reserve will do what Sonal is describing, which is a Federal Reserve that has to get restrictive, go much above neutral, or whether this Federal Reserve tolerates a period of higher inflation for a longer period of time. What shapes your thoughts about what's going to happen with the longer end of the curve?
Well, I think a lot of it does come down to inflation expectations, and not just inflation expectations, but expectations for the Fed and what the Fed actually follows through with. Right now, the markets, as we've seen this morning and through all the thoughts of all the commentators, they're pricing in a very aggressive pace of rate hikes. That gives the Fed the runway to actually follow through with that. Given what we've seen in the market so far with such an aggressive, 4 50 basis point hikes priced in there, yet we haven't seen things necessarily break yet. Financial conditions are more neutral rather than being easy or tight. They're kind of neutral. What that means for the long end, we think yields can move a little bit higher from here. Admittedly, we didn't think they'd get this high as we came into the year. But if the markets think the Fed can successfully increase as much as they've priced in, and inflation expectations remain around 3%, it wouldn't be too surprising to see the 10-year yield move up above 3% and maybe get back to that previous 3.25 level that we saw during the last cycle.
Not far away from 3% right now at 292 in yields high by just a single basis point. The curve a little bit flatter this morning with the 2-year yield up by 8 basis points to 276. Sonal, I'd love your thoughts on that as well. You've been pretty clear on what you expect on Fed funds. That implies what you think will happen at the front end. Tell me about the longer end of the curve and what is influencing your thinking about what happens there.
So I think we get steeper. We get significantly steeper. I was actually talking 3 at around the start of the year, and I think 3 definitely came much faster than anticipated because the Fed essentially got the go-ahead to go very much harder on inflation. So one thing everyone in DC seems to agree on, that inflation needs to be brought down. It's a problem. So the Fed has essentially a blank check to go out and try and curb inflation. That's number one. Number two, I think that the long end will steepen. Those initial stages when we saw the yield curve inversion, I don't buy that as actually a signal of recession. I think it was more a signal of what the market expected the Fed to do, which is to very quickly retreat from its hawkish rhetoric. And I think that that's not the case. This time the Fed is going to follow through. We are going to actually get a hawkish Fed, and the long end will probably have to steepen because inflation isn't coming down quickly enough. The Fed won't be in a position to start cutting as soon as the economy slows. Separately, I think technically, if the Fed continues to raise at these levels, hedging costs, for example, for European investors, start becoming quite expensive. So you're not going to necessarily get the technical support that, again, over the past many years we've had with roughly much more equivalent monetary policy, let's put it that way.
So, is Japan a factor there too, given what you just said?
So Japan is a very interesting factor because I specifically mentioned Europe for one reason, and that's because in Japan's case, there is a different dynamic at play, which is Japanese retail flows, we believe, tend not to hedge. And that's why you see this almost perfect negative correlation between what's going on with US Treasuries and the Japanese yen. And I do think Japan is a factor because that is the one central bank amongst the 3 major central banks, which will probably stay looser for longer and clearly in a differential fashion. So I do think that the yen weakness, while it seems almost, people have been focused on the yen, but actually you really need to look at the yen next to what's happening to US Treasuries, and then it's not that surprising.
Colin Martin, on this global story, just a final word to you, sir.
Well, this is a global tightening cycle, and we're seeing yields rise, almost everywhere, with the exception of Japan, as noted. But what's important is that spread between, U.S. yields and a lot of other developed markets, it's still relatively wide. Yes, hedging costs are picking up, but just on an absolute basis, when you see the yields we're seeing in the U.S., it does look somewhat attractive for international buyers. And then one final point, just on the domestic front, as the Fed announces its QT and we see a price-insensitive buyer step away from the market, we need to see price-sensitive buyers step in. But as yields rise, it's just becoming a lot more attractive, and that's something we've been talking about. And I think when we see the 10-year yield, if it hits that 3% level, we think we'll see a lot of demand pick up there.
292.39 right now. Colin and Sonal sticking with us. Your equity market a bit softer, negative, down 1/3% on the S&P going into the opening bout with some movers. Here's Taylor Riggs.
John, energy just continues to outperform again. Take a look at shares of Schlumberger, of course, coming out with some earnings here, both top margin and bottom line. Some big outperformance here relative to what the street was expecting and raising that dividend to 17.5 cents per share, the first time, of course, in about 7 years. Take a look at AB InBev, though, down to the downside this morning, selling a stake in 11 Russian breweries and taking an impairment charge on that business now of about $1.1 billion. Gap is a very interesting story, John. We're not expecting the quarterly results for another month, that they came out with some updated guidance yesterday. The Old Navy president has left, and they are now saying that they're looking at mid-declines now for top-line sales there in the low to mid-teens, an external search underway for someone to take over and help turn around that Old Navy business. Newmont Mining, again, sort of a day two story here, John, because yesterday we talked a lot about Alcoa and production cuts due to rising costs. Very similar story here with Newmont Mining. Rising costs means production is falling.
Taylor, thank you. Coming up on this program, China staying the course on its COVID-0 strategy.
The problem is you have the US already slowing down. You have Europe slowing down. What's the third engine? It's China. You know, if we have all three engines slowing down at the same time, it's not good news, is it? So that's the problem. And I think we focus so much on the first two engines, we've forgotten about that third engine.
We'll put the attention back on that third engine next.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Today on Bloomberg, Treasury Secretary Janet Yellen speaks live with Bloomberg's David Weston. Tune in at 11:45 Eastern on Bloomberg Television and Radio. Bloomberg, your unmatched source for global financial news.
What the market has been disappointed by is that the reaction of the policymakers in China in terms of the actions that they are taking does not seem to correspond with the seriousness of the situation which is facing the economy.
China's central bank governor signaling policy caution amid increasing concerns over inflation, this coming as Chinese stocks continue their plunge. And something happened this week that did not happen this year. That is weakness in the Chinese currency. Damien Sasser joins us now. Damien, I should say what didn't happen last year, and that was a weaker Chinese currency. This week, we're seeing it. What's changed, Damien?
Well, for me, look, we've been talking about yield differentials all year long and the fact that they've inverted out to 10 years. I'm talking China-U.S. yield differentials, but it's really the Japanese yen. Let's be clear. Yuan yen is at 1965. That is almost an all-time record. And what that means is that Japanese exports grow more attractive to consumers here in the U.S. and in Europe, set forth relative to Korean exports or, of course, Chinese exports. And I think Beijing is seeing this. I think they're acutely aware of it. And that's what drove dollar yuan to 653. I mean, on the offshore, 650 on the onshore. The spread between the two is now at 289 pips. Jonathan, that's over two standard deviations above the 5-year average. So that indicates more pressure ahead, and certainly that's what we're expecting here.
Damien, Nomura came out this week modeling a 3-handle on GDP for Chinese growth this year. A 3-handle, a big downgrade to their outlook. Are we modeling that in EM, in markets outside of China, in China?
Well, 3.9% GDP growth for full year 2022, which is what Nomura is forecasting, is well below Beijing's own estimate of 5.5%. I think we're below 5% here. Look, the policy measures to date are just not sufficient to offset the decline in GDP. We've talked about this. And so, look, we're calling for sub 5% GDP growth here in 2022, but we're also looking for another, call it 75 basis points of RRR cuts, 30 bips of cuts on the medium-term loan facility, and that may not even be enough anymore, Jonathan, because if you look at what's going on in Shanghai, I mean, peak traffic down 40%, the two largest airports in Shanghai, I mean, just 10% of the flights were actually completed on Thursday. So, we're still in the midst of this zero COVID era, and it's not changing anytime soon.
Damien, great to catch up, buddy. Damien Sasser, we're trying to stay on top of this story for you because I think it is so important, and relative to the Fed conversation, it's not getting much airtime. Mohamed Al-Arian, who's going to join us in about 12 minutes from now, published in Project Syndicate this morning and said the following. The International Monetary Fund's significant downward revision to its 22 World Economic Outlook just 1 quarter into the calendar year has generated headlines and hand-wringing around the world. But no less important is the dour forecast for 2023, which implies a broader crisis of prevailing growth models. Sonal Desai back with us for some final thoughts alongside Colin Martin. Sonal, I want to come to you on this. The growth dynamics in China and elsewhere, how they influence your outlook at the moment?
They have, to the following extent. I'd say that you're absolutely right. The China growth story is real. And I think that one is less about policy and way more about zero COVID. And I think one of the things I've been very focused on is to look for any softening of that zero COVID policy. And so far, we're not seeing it. And that is a massive problem. It's an unpredictable shock to global supply chains, but importantly, the Chinese growth engine, it's not clear that 25 basis point interest rate cuts are they're not going to cut it, right? So it's not only a question of looking at trying to see currency depreciation impact exports. You don't have the exports because the main parts of China's production and their logistics hubs are very much largely being subjected to lockdowns right now. And that's a big problem. So I think looking into next year, by the time all the monetary policy actions start having an impact, it's going to be serious, I'd say.
So Colin, if that's the picture we're looking for from Sonal Desai, and the ECB is thinking about raising interest rates, I mean, we've talked about what the Fed's got to do, what it might do, what it will do. Colin, can you tell me how difficult it will be for the ECB to get interest rates back above zero anytime soon, given what's happening in China?
It does pose a huge challenge over there, and of course not just China, but everything that's going on with Russia and Ukraine. It hits much more closer to home with the ECB than it does here with the Fed. But this is the risk we're seeing coming into 2022. There were risks to the growth outlook even before Russia's invasion. We're seeing it in most of the indicators. Although here in the U.S. we've seen some positive signs lately with Empire Manufacturing and Philly Fed, but the trend is likely slower growth. And when you add in a slowing Chinese economy, which is such a huge engine of global growth, it does pose a risk, especially for the economies in Europe. The ECB, it seems like they want to hike. They're moving in that direction. The open-ended question is how aggressive can they be given all those risks right now?
And there will be some people out there wondering what this means for the commodity trade, softer demand out of China. This is what Morgan Stanley's got to say, and here's the quote. Oil demand is likely to recover more slowly than we previously expected. But they go on to say, this is more than offset by a weaker supply outlook driven by Russia and Iran. We now see a greater deficit ahead and raise our Brent forecast to 130 by 3Q22, up from 120 just before. Colin, just a final word here, buddy. This just undermines the difficulty of the situation, doesn't it? Softer demand, and then the commodity strategist on the sales side is still saying, but crude price is higher because we've got a supply side problem.
Well, it just likely results in demand destruction. I mean, we see it with you know, our heating bills, our gas bills at the pump. That just takes money from elsewhere and where we can spend it elsewhere, especially considering, you know, fiscal aid, fiscal stimulus is well behind us right now. You have borrowing costs rising, and it doesn't look like we're going to see much relief at the pump. What that results likely is just slower spending elsewhere, unfortunately, and it just feeds to the issue of growing risks to the growth outlook going forward.
Colin Martin, Sonal Desai, to the both of you, thank you. About 8 minutes away from the opening bell, with equities doing okay relative to the move we're seeing at the front end of the bond market. I mentioned that piece from Mohammed in Project Syndicate. Typically when the IMF comes out and cuts its growth outlook, we all shrug and say the IMF is last to the game. I said that earlier this week, but this is what Mohammed points out. In this case, it has done so for 86% of its 190 member countries, resulting in a decline of almost 1 percentage point in global growth for 2022. And he's got a view on 23 too. The morning calls are next, and later we will speak to Mohammed Al-Erin of Queen's College, Cambridge. Looking forward to that conversation in just a moment. With equity futures in the United States negative 0.4% on the S&P 500 after a big move higher. At the front end of the yield curve in the Treasury market this week, we're higher by another 9 basis points this morning and up around 30 basis points on the week. And as Katie Lyons pointed out, up about 200 basis points on the year. Right now, 277. From New York, this is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Five minutes away from the opening bell, your equity picture looks like this. Down about 1/3 on the S&P. Just want to give you a quick picture of the bond market and where this curve flatness is coming from. It's the front end, selling off. 2-year yields higher by 9 basis points to 277. That's the price action. Here are the morning calls. MKM Partners raising its United Airlines price target of 59, highlighting encouraging demand in the near term. Your second call from Jefferies, cutting its Boston beer price target to 384, citing moderating seltzer demand and difficult gross margin pressure. Finally, people backing away from a drink that I didn't enjoy. Anyway, less about that. Meta, BMO, cutting its price target on the stock to 225. The analyst citing the possibility of further multiple contraction with earnings on deck next week. Their stock is up by 0.9% to 189. Coming up, Chair Powell putting a half-point hike on the table. Chairman Powell over the last year on inflation has been wrong. Mohammed Al-Erin has been right. And he joins us around the opening bell next. From New York City, this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
About 25 seconds away from the opening bell in New York City this morning. Good morning. On the NASDAQ, heading for a third straight week of losses on the NASDAQ 100 this morning. Down again by just 0.05%, just about holding in there given what's happening in the bond market. Equity futures on the S&P down about a third of 1%. There's the opening bell. Let's take a look at that bond market. Your 10-year yield looks like this, up 2 basis points to 292.78. Your 2-year yield up a whole lot more. The curve this morning is flatter. The euro a little weaker. Euro dollar down to 108.26, going into the second round of the French runoff elections and all that good stuff on Sunday. Crude 102.14. We're negative there, 1.6%. Down by about $1.64. With some moves at the opening bell, let's get to Taylor Riggs. Hey, Taylor.
John, it's been far too long since we discussed Twitter, so I'm going to mention Twitter and Elon Musk again just to make your day at 9:30 in the morning. But take a look at the shares, of course, because Musk coming out and saying that he has secured about $46.5 billion. Portion of that, $25.5 in debt, $21 billion in equity. So maybe a little bit more than the $54.20 a share, depending on some analysis that you read. Take a look at Kimberly-Clark. You think about some of the big pricing powers that these companies have and the staples passing on to the consumers. Consumers don't mind. These organic sales are up 10% on higher prices. Schlumberger, I mentioned that earlier, a little bit to the downside. They're beating though on the top margins and the bottom line. Energy continuing to have a good year, but not quite seeing that reflected in the share price. HCA Healthcare, just another one that we're looking at, down about 13% or so, saying that big labor cost inflation, John, pressuring the bottom line.
Taylor Riggs, thank you. And you mentioned the gap a little bit earlier, that at the open, getting hammered by 19%. A rough start to big tech with Netflix getting hammered in a much bigger way earlier this week. Next week, Apple, Alphabet, Microsoft, Amazon, all on deck. This is my favorite week of earnings right here, Katie. Not the banks, but this one.
Well, it certainly is when all of the heavyweights are coming. When you put 4 companies together, just Alphabet, Apple, Amazon, and Microsoft, they together represent about $8 trillion in market cap and 4 of the 5 largest weightings in the S&P 500. So when their results come, it matters in a big way to this market. Now, as you said, we're getting results from all of them next week and others as well, including PayPal, Qualcomm, Intel will be in there. So it's going to be very busy. Now, as you mentioned, Netflix didn't necessarily start things off on the best note. In fact, it was a pretty downbeat one with those subscriber losses and weak forecast. The company also posting the slowest revenue growth on record for a quarterly number. And as for how revenue growth is shaping up for some of these other tech giants, Alphabet is expected to post a roughly 24% jump in sales, 18 for Microsoft, 8 for Meta, 7 and 5 for Amazon and Apple, respectively. For a lot of these companies, that would be the slowest revenue growth going back to 2020. So will they beat? Will they miss? Remains a question, but we do know whatever the outcome, it does have the power to move this market. As I mentioned, all of these companies are incredibly heavily weighted within this equity market. And when you put together the options implied post-earning price moves to the upper downside for those four, as well as the other companies reporting next week, the market is pricing in nearly $1 trillion of market cap creation or destruction in just a 5-day period, John.
We could call it market crap as well. That works too.
It might work.
Kaylee Lights, thank you very much. This is what Michael Hartnett of Bank of America called it this morning, the meta curse. Words of extreme caution. A world of extreme inflation, his words. Rate shock just beginning. Secular flip from QE winners to QT winners. A rate shock equals tech trauma. Social media stocks back at spring 2018 levels. Fair to say that Michael Hartnett is still bearish on the rate story and what that means for the equity market. What does it mean for growth? This is an important conversation now with Mohamed Al-Arian, writing in the latest Project Syndicate piece the following. The IMF's significant downward revision to its 22 World Economic Outlook just 1 quarter into the calendar year has generated hand-wringing around the world. But no less important is the dour forecast for 2023, which implies a broader crisis of prevailing growth models. Mohamed has been right over the last 12 months on inflation, where Chairman Powell and the rest of that central bank have been very wrong. Mohamed joins us right now. Mohamed, that's the inflation story, and we can touch on that in a moment. To what extent do you think we are missing the growth downgrades through the next 18 months?
We are, John, unfortunately. There are 3 big changes going on that we have recognized the impact on the inflation side, but we haven't recognized the impact on the growth side. 1 is changing globalization. 2 is limited policy flexibility. And 3 is the payback for many years of depending on artificial sources of growth. And when that unwinds, it doesn't just have an inflation component that we're talking a lot about, but it also has a medium-term growth component that we're going to start talking about as well.
So, Mohamed, over the last month, you've talked about this binary choice between a hard landing or prolonged inflation. Is this another reason why you think the central bank might have to choose a lesser evil here and tolerate above target inflation for a much longer period of time?
John, you know, it's gotten really complicated. I think now there's broad appreciation that a soft landing, that pathway is not very likely. We should hope for it. It's certainly the most desirable way to go. But because the Fed is so late and because the market keeps on running away from the Fed, it's less and less likely. So that is really unfortunate. Then you got to, like you said, make a decision about if you have to make a mistake, which one? I suspect the Fed will end up flip-flopping. I don't think they're going to opt for one or the other like most Wall Street analysts are trying to do. I think they'll end up flip-flopping. And that's not a good thing because that means we may end up with an inflation problem persisting and a growth problem persisting.
Put some more meat on that, Mohamed. What will lead to that flip-flop?
So already the Fed's being forced to get more hawkish. Every time it gets more hawkish, the market says, I want you to be even more hawkish. You've been talking about it this morning. Now suddenly 75 basis point hikes are being talked about when 4 weeks ago, talking about 50 basis point hike was courageous. Yesterday, the break-evens went up. The implied market measure of inflation went up just after Chair Powell became even more hawkish. So what you're getting is the Fed isn't able to catch up to the market narrative. We've seen this in developing countries. It's not a good dynamic to be in. It typically results when you're very late as a policymaker, and we're seeing it play out, John.
Mohamed, you touched on something really important. You brought that up earlier in the week as well. As we've been talking about bigger and bigger rate hikes, break-evens have kept picking up. Now, I wonder, Mohamed, whether that's a factor of a conversation about getting to neutral quickly, which ultimately is irrelevant to what's going to happen further down the road. If you go from, let's say, 0 on interest rates at the Fed funds to 225 and you do that quicker than anticipated, but then you stop, do you think that's what this market's picking up on, Mohamed, that actually we have consensus at the Fed about getting to neutral, but we still have a divided Fed about what we do after that?
Yeah, putting it in terms of neutral is having a very sophisticated packaging to something that's really uncertain. I don't think anybody knows what neutral is. I really don't. It's a time variant concept. It has been influenced by all sorts of distortions that have been taking place. So I certainly don't know when neutral is, and I doubt that anybody can accurately say when neutral is. But it does speak to the other dynamic, which is having failed to ease its foot off the accelerator for so long, the Fed is going to be forced to slam on the brakes. As it slams on the brakes and jerks other things in the economy and in markets, it's going to then ease off the brakes. And that's what the market is saying. Now, if you want to put it in the language of we get to neutral and then we stop, that's fine. But I think fundamentally it's a different dynamic. It is the one of the stop-go element that tends to result when you are late in adjusting policies.
Mohammed, one thing that I've been guilty of and often guilty of is to look for fundamental explanations for price action. And this week may be a good example of that, where we've had another big move in the bond market, people associating it with something maybe Chairman Powell has said or with some economic data somewhere else. But over the last couple of months, I think what we've both witnessed, and you and I have talked about this together, is that we've had these big moves and often there isn't a catalyst for them. And Mohammed, I'd love for you to build on that for our audience today, just to explain what you think is happening within this bond market and whether it's actually connected to anything fundamental or any particular catalyst whatsoever.
So let me give you a factoid. Just before Chair Powell spoke yesterday, the 10-year yield in the US had traveled 30 basis points up and down in the last 3 days on no major news. That is liquidity. And what you're seeing is that the deepest market in the world is having some, at the edges, liquidity strains. And we're seeing these outsized moves in yields. Now, people who've been in market for a long time are saying, keep an eye on this. This is interesting. Why, John? Because right now we've only talked about interest rate risk. We haven't talked about liquidity risk. We haven't talked about credit risk. All the focus has been on interest rate risk. And a really open question is, at what point does interest rate risk spill over into liquidity risk and credit risk? And that's something that we should be talking about much more and analyzing deeply.
Mohammed, let's do that now. What do you think is fueling that?
So I think the market is obsessed with interest rate risk right now, but growth is weakening. It is weakening all around the world, in the US, in Europe, in China. At some point, we're going to start wondering about credit risk. And then remember that you have a whole marketplace that has been conditioned by what remains very loose financial conditions. Let's remember that. Financial conditions, while the delta has been towards tightening, the absolute level for the US is still very loose. If that changes, which it will if credit spreads move, if equity prices move more, and if rates stay where they are, if that changes, then you've got liquidity risk in play as well. So that's the sequence. You know, John, I didn't want to be right on inflation. I didn't want to be right on the Fed being late. I don't want to be right on interest rate risk becoming also credit and liquidity risk, because then we are in a much messier situation than we are today.
Are there reasons to believe that you will be right on that? And what are those reasons?
I think the reason basically to believe that is that you may get a policy mistake, an even bigger policy mistake. And that by itself would turn interest rate risk into also credit risk and liquidity risk. So that's the reason. If you think the Fed is going to make a policy mistake, and the market is starting to signal that. I go back to the break-evens. I go back to what's been happening to the front end every time they speak. That's what you have to keep an eye on. That's the key judgment that you have to make right now.
Can I ask a broad question then about market exposure, Mohammed? How you'd allocate to risk assets right now, how much risk you'd be taking, and as you think about maybe what you'd describe as the risk mitigation characteristics of treasuries, whether they are still a factor that you would want in a portfolio.
So you've heard me say for weeks and weeks, okay, that it's time to take chips off the table. And yes, cash is not that attractive with inflation at 8.5%, but a bond market that's down 10%, and NASDAQ that's down 15%, cash is not a bad short-term shelter. Now, the good news is that value is being restored. It's a painful process, but value is being restored. The bad news is we're coming from very, very distorted prices levels, so it's still going to take some time for full restoration of value. So I'm still cautious here. You know, am I attracted in the 2-year at 276? Yeah, that's much better than 1%. But I'm not sure that the adjustment to the changed liquidity paradigm is over yet. So that's why I'm still cautious, and I have been, as you know, for a number of weeks. And I've said it on your show, John.
You have. Mohammed, you've been a good friend of this program. We appreciate your time this morning. I know it's super valuable to the whole audience. Mohammed Al-Arian there of Queen's College, Cambridge. He doesn't like to boast about it, but he has been right, and this Fed has been dead wrong, and that has been captured by the front page of The Economist this week, that's for sure. You'll see the headline on that. The Fed that failed, how inflation humbled America's central bank. Quite a front cover from The Economist this week going into the weekend. I know a lot of you are thinking, maybe it might be time to lean the other way. Maybe. I'll allow you to make that decision for yourself. Coming up, investors looking for places to hide amid surging inflation.
Do I want to sit on the sidelines and just hold cash? With inflation, I think that's actually risky. So owning hard assets and things you have high conviction in makes sense.
We'll get a call on big tech and tech earnings next week with Brian Levitt of Invesco.
Okay, traders, let's move on with Bitcoin, and let's move even further. Our stop for 40,588. Okay, we increased our profit to £2,000. 40,588. Okay, guys, please copy this and stay with me. Let's see how far it will go. Minus. Even I will move. I can move to 40,318. Let's change again. Even move to better. £2,500 profit to 40,318. Okay, it's even better. Just right here. That's great. Okay, we're already in profit, £2,500. I'll speak to you later. Stay safe.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
One of the things for individual investors to think about is in a volatile market like this, do I want to sit on the sidelines and just hold cash? With inflation, I think that's actually risky. So owning hard assets and things you have high conviction in makes sense. And what you're seeing is an expression of that high conviction.
Where do you go with inflation at 8.5%? That was the brilliant John Gray of Blackstone. Looking at this equity market, we look to the data now with some breaking news. Here's Taylor Riggs.
John, the composite PMI, of course, is out, and it does not look good. You have it rolling over to about a 55.1 on the S&P Global Composite Index. That's down from survey expectations of 57.9, and indeed down from the previous month of about a 57.7. Why? Because the services PMI is also rolling over in a decent way, down to about a 54.7, below expectations and down from the previous month of about 58. Manufacturing a little bit better, 59.7 versus estimates of about a 58, and indeed a little bit higher than the previous month of 58.8. But overall, this looks like a little bit of a weaker read from the services side. I think what I can see, the second lowest number that we've had since about June of 2020. Of course, still in that expansion territory, though.
Taylor, great work as always. And Taylor, thank you for everything this week, for stepping in and stepping up. Thank you very much. Taylor Riggs there on the data. That's the last big data point for us this week. Looking ahead to earnings next week with big tech on deck. Apple, Alphabet, Microsoft, Amazon, all coming out with earnings. Joining us now, I'm pleased to say, Invesco's Brian Levitt. Brian, straight to you, sir, and straight to your outlook for some of these big names. What are you looking for?
So I think what investors are going to realize is that these are not there's more diversification amongst these names than we may have thought in the past. People used to paint big tech with one broad brush, and of course you're seeing a differentiation with that in the market. So for a company like Microsoft, the cloud computing business is strong. You're likely to continue to see strong earnings. For companies like Google or Meta or Alphabet or Meta, where that are being supported more by ad sales, you're likely to see slower revenue growth or earnings growth than a company like a Microsoft. So it's going to be more differentiated than what it had been in the past. But I do think what investors should be mindful of is, they tend to want to sell tech that they consider to be longer duration assets. The reality is a lot of these companies, like an Apple in particular, sitting on a lot of cash, likely to buy back stock. So when I think of where we are in this market, it's more about quality and cash flow generation rather than painting a sector with one broad brush.
Brian, is that reflected in the price action that's been developing over the last month or so?
Yeah, you've certainly seen some of these, if you go back to the old FANG, you've certainly seen the market take out pretty significantly companies like Facebook or Netflix that have just not met the expectations of the market. And when a big company like that at lofty valuations underperforms, the market is hitting those companies hard. Whereas other parts of the market, you have not seen that type of other parts of the tech sector. You've not seen that type of hit. A company like Apple, which is again sitting on a lot of cash. Yeah, sales are going to slow for the iPhone and the Mac. They have been. Supply chain challenges still persist with zero COVID. But certainly a company sitting on a lot of cash and viewed by investors as very high quality.
You mentioned Meta a few times. Facebook this week is down by almost 10%. On the year, it's down by 44% almost. It's been terrible for them year to date, difficult over the last year. You mentioned Apple too. You didn't mention China in a big way. So can we talk about that, Brian? I'm actually really looking forward to the Apple earnings because I want a decent read on what's happening in China. How do you think that's shaping the story for them?
Yeah, I mean, the China story is a challenging one right now because of the zero COVID policy, because of hundreds of millions still under some form of lockdown, which creates further supply chain challenges. We've already seen slowing growth for hardware for Apple. You've seen it in the iPhones and the Mac, not to dangerous levels, but a slowdown, as you may suspect, given following a period in which consumers spent a lot of money on a lot of these types of products. The question, I think, in Apple is really to look at what's going on in services. Concerns with what you've seen with Netflix as subscriptions have slowed or people have even left. You want to look to see within services how Apple is faring.
Brian, that's the earnings story for the individual names. Let's just get to the bond market briefly. Can you walk me through how you think the front end of the yield curve is connected to what happens with some of these growth names? Because I get a lot of people that come on the show and say it's a big story, it's a big issue, there's a direct link between the pain they're going through, others that push back. Where do you sit in that debate?
Yeah, I would say that you'd want to think about where long rates ultimately settle. I mean, the move up in short rates and a flattening of the yield curve, tighter financial conditions, and what we're starting to see as Taylor represented, some slowdown in the economy, should tend to favor structurally advantaged growth businesses, companies that can still generate growth in a weaker economic environment. The challenge that we've seen as rates have shifted up across the yield curve and continue to move higher on the 10-year is a valuation readjustment. And in the market's eyes, some of these names were, particularly like a Meta or like a Netflix, are trading at very elevated valuations and have now been brought down meaningfully. So, you know, I would say that, you know, as conditions continue to tighten, the economy slows, I think investors are going to be back looking for high quality, and some of those are going to be the big tech winners, the big tech names.
Brian, great to catch up, buddy. As always, Brian Levitt there of Invesco, looking at this equity market into earnings next week. Two things I want to look at outside of the equity market, which is struggling a little bit. At the front end, yields are higher by 6 or 7 basis points on a 2-year to, let's call it, 275. And sterling, we were recovering briefly for the best part of 10 minutes. Some renewed weakness again. Cable 128.79. Earlier on this morning, consumer confidence in the UK, the lowest since 2008. Retail sales worse than expected. And a Bank of England that's now staring down the barrel of hiking into weakness. Coming up, your trading diary, the guide into the weekend and out the other side into next week. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Six minutes into the session, your equity market is down by about 0.7%. Down on the day for a third straight day, and down on the week for a third straight week. That's the price action. Here is your trading diary. Treasury Secretary Janet Yellen coming up at 11:45 Eastern Time. Speaking to David Weston, do not miss that. Secretary Blinken, the Ukrainian Prime Minister, alongside each other, 2 p.m. President Biden speaking later this afternoon. Plus, France's runoff presidential election this weekend. And finally, into next week with earnings from Apple, Amazon, and let's just keep calling it Facebook and Alphabet, all on deck. From New York, thanks for choosing Bloomberg TV. This was the countdown to the open. Enjoy your weekend. This is Bloomberg.
Connection lost.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition.
Connection lost.
Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance, they say, is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complications due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning 1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing